So there are, there are many ways where we could create great jobs instead of this whole reordering. And so I believe the markets, I've always believed in the markets, and I believe the markets are telling you the real story, and the markets are telling that story right now. Could the story be a little too negative now? Maybe. Could it be not negative? Not maybe too. I'm not here to suggest we're over this pathway. We'll have to see how this plays out. You know, and so we're going to have to see how this plays out. But let me step back and respond to another statement you said. Let me just reiterate, 75% of the global capital markets rested here in the United States. I would say that means the United States is fabulously successful when you have that. That being said, and I wrote this in my CEO letter that came out a week ago today, the biggest issue we have in capitalism, the biggest difference that we have today is we have not seen a broadening of the economy as much as we need to. And I think this is what President Trump is trying to do. How can we broaden the economy that we can have more opportunity for more? I mean, like I said, I think we need more schools that help men and women in the trades like electricians and other areas where we know we have a severe shortage right now. And the other thing I would say, if you look across the different manufacturing spectrum, there's a lot of job openings. My biggest issue is all of this, and this is where the market is not focusing on enough. All of this, in my mind, is much more inflationary than the market is expecting right now.
How much more inflationary?
Well, the market is talking about all the recessionary pressures, which obviously will mute down prices. But if all the tariffs, and I'm not saying they're going to be put into place, if all the tariffs are be put in place, almost so many items are going to be much more elevated. Two,
more expensive.
Yes, more expensive. We have so many needs for jobs already, and we're at 4% unemployment. When I started in Wall Street in 1976, full employment was considered 6%. And we reevaluated, and now we say maybe what is full employment, 3 or 4? I don't know what if they even use that term anymore. But we have shortages of workers, and we're going to have even more shortages of workers. And if you overlay a part of the reason why we had American exceptionalism 80 days ago, and AI, the need to build out infrastructure is just as great today. And my biggest fear as we roll out AI in the United States, building these data centers, building our electricity grids, building out America, building out our infrastructure, we don't have enough workers already. All of this is going to lead to higher elevated wages, which is in some respect a good thing, but a lot of it is going to be elevated inflation. So this notion that the Federal Reserve is going to tighten, ease 4 times this year, I see zero chance of that. I mean, I'm much more worried that we could have an elevated inflation that's going to bring rates up much higher than they are today.
Zero chance of 4 or 5 Fed cuts, depending on what moment we're looking at futures prices, or zero chance of any cuts whatsoever.
That's not an unrealistic idea, and I think the Chairman Powell said that last week when he said we need to have more information. Right? I don't see any reason to cut right now, and that's how I interpret his comments last week.
So you're concerned about inflation. You briefly mentioned
can I interrupt? Excuse me.
Sure.
I'm concerned about inflation if all the proposed tariffs truly go into place. At the same time, you have, if the president is successful in changing the behaviors of other countries by bringing down the tariffs, we could actually, the end result could be lower tariffs across the board. And I think that's what when he talks about reciprocal tariffs, he's talking about, I'm going to match your tariffs, and if you bring them down, I'm going to bring them back down. And so there is some value to that. Our tariff system was founded post-World War II, post-Korean War, where we believe that if we could lift these other countries post these crises, American business would be the biggest beneficiary. And we have not changed how these asymmetric tariffs that we've created over the last 80 years. And, you know, is there a value today to relook at how we have tariffs today and how to try to make it more symmetrical? Sure. And so we'll see how this all plays out. My former partner.
Ralph's lost time. So you've touched on this idea, Larry, that perhaps there's some justification for a change in.
Yeah, I mean, look, I was with a senator today, and he talked about we import 29 million tons, which seems like a lot, of beef from Australia, and yet our beef cannot go to Australia. Okay, there's something that sounds like a legitimacy.
So that's one of the justifications that the president cites, right? Fairness.
Yeah.
Right? Other countries are, in his words, ripping us off. The second.
I'm not going to go talk about that.
Okay, the second is revenue. Taxing imports will raise trillions of dollars to pay down the federal debt.
At whose cost, though? No, that's never discussed.
And then there's a third, right? Yeah. Reindustrialization, that companies will bring jobs and factories back to America. Which of those, is that a package of arguments that makes sense?
I believe there are in some areas where we need to bring back manufacturing for national security areas. I don't think Barbie dolls is something that we're going to, or Swiss watches or anything like that we have to have, or shrimp from Vietnam. I mean, all these different things. There are some industries where having a more control of your supply chains is probably very. So
you're
important.
Making the case for a much more calibrated.
But that's who I am. I'm always a little more balanced in the center. Yes.
What about the theory that these retaliatory tariffs are part of a Nixonian grand strategy, like dropping the gold standard was to solve America's debt problem by forcing down treasury yields and weakening the dollar? That's a theory that has some purchase right now.
Well, I do believe the dollar will be weakened. I mean, most political theory is, or economic theory is, tariffs raise the value of the currency. I think it's going to weaken the dollar. Look, the one thing I would say with certain, the economy is weakening as we speak. And so the need for the administration to focus on these pro-growth agendas, which was much of what the president campaigned on. We have to get that going, whatever it's the tax cut. We need to be deregulating. We need to be streamlining permitting. Exactly all the things I've been writing about, where we need to get the private capital, private markets to start investing in the United States. We need to, and I think right now the market's not focusing on all these. We forgot about the power of AI, the power of all these different changes. We're focusing on the market, but the macro trends of AI, the macro trends of rebuilding our infrastructure, these macro, and if the president is successful in deregulating, if he's successful in streamlining permitting, then we could go back to this view that we have a major growth agenda in front of us. The president has been focusing on right now areas that in my mind in the short run are very inflationary and destabilizing the economy. And that's what we've been talking about. But if we can find ways of rebuilding growth through these agendas, and then, as I said at the beginning, the market declines, we're going to look back and say this might be a good entry level to get back into the market.
Are we headed for a recession? Are we in a recession?
Most CEOs I talk to would say we are probably in a recession right now.
Right now?
Right now. A couple of airline CEOs told me, one CEO specifically said, the airline industry is like a proverbial bird in a coal mine, canary in the coal mine. And I was told that the canary is sick. Already. If you look at what's going on in air traffic and how people are changing and how so many people who, like Canadians who are not coming to the United States, we're seeing in various different sectors a real downturn.
I have no doubt that people in this room and elsewhere are encouraged by this idea of yours that there are opportunities to seize. And it doesn't surprise me to hear you say that, because in the 16 years that we've known one another, you've always found a way to think constructively about the future, to make a case for taking risk, to make a case for staying invested. So explain that case right now. If, as you say, there's the possibility that at the very least equity prices continue to go down, what should people do? Where are these opportunities? I can see why there might be opportunities for a firm like BlackRock, but what does everybody else do? Do you stay invested? Do you take risk? Do you take money off the table? What do you do?
Well, I would not be taking money off the table right here. I think that we've had enough, from the high water point of January, which may have been excessive. I think a rolling 1 year average, the S&P is down about 7% now. Could it be down? As I said, could it be down 17% from a rolling 1 year average? Sure, that would be about 40% from the high water mark.
That's a lot.
That's a lot, and it's a great entry level to get in, because I think the macro trends are not going to change. The need for the United States to rapidly build out AI is imperative today as it was 3 months ago. Our need to invest in our infrastructure is as great as today as ever before. And so some of the big macro trends have not changed. The narrative that has changed. We're not talking about it, but I think if you spend time right now with the CEOs of the hyperscalers and the NVIDIA and other players, they would say the need is just as great today as it was 3 months ago. And I think some of the big macro trends are still in place.
Do you believe in a Trump put?
A who?
Trump put.
What is that?
If the markets weaken too much, that he'll reverse course on policy, tariffs, for example, or somehow engineer a combination of stimulative measures to bail them out.
That's what I said. I do believe the president is going to be focusing on these pro-growth agendas. And so we'll see how that offsets.
That's different, though. That's something that he's been promising the whole way along.
Correct. And so
Trump put would be effectively about the president getting scared.
I don't know how to value that.
Tariffs, Larry, are just one piece of a much more comprehensive policy agenda. Since the inauguration, we've seen major initiatives on everything from immigration and the border to rolling back DEI. I could go on, there's a lot, most of it by executive order. Again, trying to take a step back from the burning question of tariffs, which are occupying the markets at the moment, right? How would you evaluate these first 11 weeks of Trump 2.0?
A lot of volatility, a lot of change. And I think even before the tariffs, there was so much change, so much volatility. I think this is one of the reasons why even 4 or 5 weeks ago, most CEOs were telling me business is incrementally getting worse. I think whether it was a threat of tariffs, whether it's just all these changes, I think more and more people were pausing and slowing down consumption as we speak. And I think all of this is just going to slow down consumption. One interesting fact, and I wrote about this in my CEO letter this year, there was always this notion that Main Street was different than Wall Street. And we always, it was good political statements about, Wall Street is here and Main Street's here. Well, the reality is 62% of Americans now invest in equities. So the market impact is impacting Main Street. And so even before this market setback, you were starting to see more and more, I would say, trepidation by consumers more and more, slowing down their purchases, slowing down their vacation plans. And all of this, I would imagine now with the market setback, is going to freeze more and more consumption. And I think we're going to start seeing that really quickly. So so I do believe in the coming months we're going to see more evidence of a slowdown in this economy.
And investors are going to have to continue pricing that in, whether that's an impact on economic growth, whether it's whether less consumption leads to.
But we're going to also see how companies navigate these tariffs. Are they going to navigate the tariffs by trying to jam it down the manufacturers and lowering prices? We've already heard a couple of U.S. retailers going back to their place of manufacturing and telling me you got to lower your prices. So that's one point. One point is, are they going to absorb the tariffs in their margins? That's not good for the equity market. Or are they going to just pass it all the way on to the consumer and elevate prices? It's probably going to be a combination of all three. But until we see how this all plays out, and then two, how much of these tariffs are going to be actually implemented, we'll see. But I think most of America does not understand the extent of these tariffs. What is it? 86% of toys are manufactured in China. So there's what, a 67% cumulative tariffs now in China? Those are going to be expensive Barbie dolls.
They are.
And I mean, but across the board, you know, the tariffs across the board, everything we're talking about is just going to be, you know, I'm not saying 100% is going to be passed on in terms of the final purchase price, but a lot of it's going to be passed in, and then the cumulative effect of that. So just think about, there are more American jobs in the fabrication of steel and aluminum than there is in making steel and aluminum. So we now have these aluminum and steel tariffs in place. What does that impact in the demand of the fabricated products? So all these things have major ripple effects. So we have and this is why the market's down, because it just creates this vast amount of uncertainty how this will all play out.
And uncertainty means paralysis, right? In the boardroom, in the C-suite. For how long? I mean, how long? This is the question that management teams are asking themselves right now. You know, how do we move forward? Well, is there a way to move forward yet, or as you said, you have to wait and see?
I think in most cases you're going to have to wait and see. But look at if you were in a boardroom looking at acquiring a company, well, it's cheaper now, a lot cheaper now.
But you also may have less currency.
Okay, fine. But if you're doing 100% equity, it doesn't really matter. So it's not a binary decision. I don't think it's going to defer all these decisions. I mean, obviously, already we saw, a number of IPOs pausing, and probably for a good reason. But it's not like it's over. We're going to reassess itself. Maybe some of these valuations of these companies that were going to go public are going to be down 20%. In the long run, if they have a vital, strong business proposition, their stock will be fine. Yes. So sell a little less secondary shares, sell all primary, and it really doesn't matter.
Larry, what are foreign leaders telling you about these big shifts in U.S. posture and policies?
Look, I saw a couple of foreign leaders last week in Europe. You're asking my opinion, so
I am too.
They're pretty shocked. They're questioning. They're also willing to think about, okay, where is there asymmetry in the trading agreements with the U.S. and is there means and ways that we could be, managing this more successfully, that we can move forward. Some are going to be adapting. Some are going to be retaliatory, like what China did.
What do you think is the right approach? To stand up to President Trump like Mark Carney is doing in Canada and the Europeans might get around to doing, or be more non-confrontational like the UK or Mexico?
Well, I don't think Mark is being 100% confrontational. I mean, I think
he's talking a good game.
Look, everybody's job is to try to solve problems and try to move forward. If you truly believe in your country's situation that you've got to be confrontational, see how that works. I don't think there's one shoe that fits all. And so I think we're all going to have to play this out right. Look, I do believe the issues that we had with Mexico were was less related to in most trade. It had much more had to do with immigrants and fentanyl. And I think the government of Mexico has mitigated much of that in the short run. So we'll see how that all plays out. So that came to a better outcome for America too.
Will it be harder to operate as an American company outside the U.S.?
I'm hearing worries and concerns, but if, whether the U.S. is put on a pedestal or knocked off a pedestal, each and every country, each and every company has a responsibility to prove every day that you're a fiduciary in each and every country. So if you were a company that was not proving each day that you're trying to be working on behalf of your clients in Italy, or on behalf of your clients in Korea or Australia or Canada or Mexico, you're not going to be serving your clients in the long run. And so, to me, this is why I started off this conversation today. We're in 106 different countries. We have offices in 36 countries. Our job is to prove every day that we are working on behalf of each and every client. And so of the $11+ trillion that we manage, zero is our money. Zero. So if we don't prove every day that we are working on behalf of each and every client and helping them, then we're going to fail anyway. Will there be some negative overhang? Maybe, but I don't believe that's going to be translating into I would say a direct impact on the future of our business.
There is obviously no small amount of risk in running afoul of the president. He has shown himself to be willing to inflict a lot of economic pain on his critics and his opponents. Do corporate leaders have to choose their words carefully?
I think corporate leaders have to choose their words carefully with every government. It doesn't matter who's in office. I think our job is to, as a leader of BlackRock, my job is to be working on behalf of each and every country as best as we can. Our job is to provide the best advice that you can. And when you can give advice that is held in private, you can do it one-on-one or in a small group of people. Your job is to be earnest and forthright and not to BS anybody. And so I've made my career around not telling political leaders what they want to hear, but I've led my professional career in telling political leaders what I think they should hear.
When I used the term economic pain, I had one thing in mind. A lot of people, including many people here in this room, have been following the president's attacks on law firms affiliated with attorneys who prosecuted him. And some, including Paul Weiss and Skadden and Wilkie Farr, have cut deals to save their businesses. Others are fighting the president in court. What do you make of that use of presidential power?
Let's move on. I mean, I honestly,
I could rephrase. If the president threatened to bar BlackRock from federal business, like managing money for civil servants, which you do, and warned your clients they might lose federal contracts, how would you handle that?
I would look at what the issues are at large and what the administration is asking, and I would make a judgment on what is the value of that, and am I standing up to the principles that I tell every employee at the firm? Are we living those principles every day? Are we doing what we need to be doing, or is there something that in my past that we needed to mitigate? So I don't know the circumstances about any of the law firms. BlackRock has, our job is to be working on behalf of everybody. Last year, clients were awarded us $631 billion of new money. On Friday, we'll announce our first quarter. Our job is to prove every day that we're working for our asset owners. And so I couldn't answer that question how I would play it.
You were at the White House last month to see the president after BlackRock clinched a multi-billion-dollar deal to buy the port operations from a Hong Kong company, CK Hutchison.
I'm glad you said Hong Kong.
It's
Yes.
important, right? That deal was important because it included two ports in Panama that the president had accused of being controlled by China. J.D. Vance was at this meeting. Mark Waltz was at this meeting. Elon Musk was at this meeting. What did you learn from them?
I'm not going to talk about the meeting. Let me just go back on the TikTok of the deal. Hutchison has been talking about for 2-3 years on the idea of possibly entertaining an idea of selling their ports. If you look at their stock price, their stock from our evaluation was trading at 30% of book. It was trading around a 26 billion market cap at that time, and they saw the valuation of the ports to be worth at least 22 billion of it, and they have many more enterprises within the whole complex. So they went out and spoke to dozens of different potential investors. Because of our acquisition of GIP, we already had a large position in ports, having over 50 ports alongside our partners, MSC, and their port business, TIL. And we coveted the opportunity of adding on the Hutchison's ports to the port business that we have on already. And all the who's who of New York private equity was bidding on it. Every major shipping company put a bid in it. And so this was a pretty sought after asset. And I believe our consortium with MSC and TIL just gave us an overwhelming position. And the one thing I would tell this audience, 100% of the investment was done as a profit opportunity on behalf of our investors. There was not a kernel of decision-making related to any geopolitical considerations at that time. That being said, once we started into an exclusive conversation in locking down the deal with the seller, I did reach out to members of both parties, not just one party. I did have conversations with the administration. And we had conversations with some of the countries where the ports were located. So we I don't think I would have done anything differently. We were trying to be a fiduciary in everything we were doing. Now, obviously, it became much larger because if you read 90%, maybe 100% of all the papers, it said BlackRock bought Panama. I mean,
it's not a done deal yet. The Chinese have raised some concerns. What happens now?
I think this is going to be a very interesting thing to watch for geopolitical purposes. China is just, China is going to be reviewing this. Just like every other M&A transaction, we would have to go to 50 different jurisdictions for anti-competitive reasons. In China, because one of the big users of all the ports, none of the ports were in China, that'll be one of the jurisdictions that will review the transaction. And so that's the only way actually China can stop it.
Well, is there a greater risk now because of last week's tariff announcement that it does actually move to block it from taking place?
Of course it can, but it's going to be 9 months of regulatory review. So we'll see how this all plays out. I'm actually pretty optimistic that we will find a solution. Because if you look at it, everything was done in the right order. It was not done politically, despite all the narrative. It was done.
A solution with or without the Panamanian ports?
I'm pretty confident it would be the Panamanian ports only represent 4 or 5% of the total valuation of the whole enterprise. There's There's 6 port concessions at the Suez Canal that no one has ever talked about. So I just got to give you, some of the color. I mean, the port of Rotterdam, the biggest port in Europe, is one of the concessions there. It's going to be reviewed as one transaction.
You're confident?
Yeah. As of the moment, yeah.
Is this kind of thing going to become a trend? Big ticket M&A, especially if critical infrastructure driven by geopolitical risks?
Well, let's be clear. 2 years ago, no one would even care about a port. It would have been on page 40 of financial press. I mean, there was a lot of port transactions in the last 2 years that no one cared about. Yeah, I think this is a new reality today that countries are going to be looking at all these different geopolitical issues. That being said, BlackRock last year announced 3 mergers. There were 3 acquisitions. 2 of them are closed. In the first 2, we were hung up by 1 jurisdiction for crazy reasons. The GIP deal was closed because one of the assets, one of the infrastructure assets they had, and our Preqin technology transaction was held up for 5 months by 1 jurisdiction. I mean, they both closed, and so it just requires conversation. And we're mostly through with the regulatory review with HPS, and we already said it should close early 2nd quarter. Excuse me, this is early 3rd quarter, or no, late 2nd quarter. I got to get my quarters right, and we're on track, but. Yeah, I do believe there's going to be a little more review, but we saw that already in the last year.
More review, yes, for sure. More activity?
More M&A activity?
Because of geopolitical risk.
Oh, no. If the geopolitical risk creates economic opportunities, yes. But M&A is not going to be because of geopolitical issues. It's because, if geopolitical issues creates opportunities, I think there are going to be more M&A opportunities as we deregulate.
There you have it, live in conversation. The CEO of BlackRock, Larry Fink, speaking at length about the market turmoil that we've experienced under the Trump tariff regime, his thoughts on all of this, saying the economy is weakening as we speak. Fink telling Bloomberg more of a buying opportunity right now than a selling opportunity when he looks at the market, but he would not also rule out another 20% decline. You heard the room groan at the Economic Club of New York when he said it doesn't mean the market can't drop another 20%. Larry Fink going on to say we're probably in a recession right now, adding that most of the CEOs he talks to say, yes, we are already in a recession. A lot of headlines on the terminal and a lot to absorb, a lot to digest from our conversation with Larry Fink, Bloomberg's Eric Schatzker, really getting to the heart of the matter as Donald Trump not only bears down, but in fact ups the ante on tariffs, threatening right before that conversation began on Truth Social, another 50%, an additional 50% tariffs on China if they do not withdraw their retaliatory tariffs that are set to take effect in a couple of days. A lot to talk about here. Larry Fink suggesting we're already in a recession, and Wall Street is pointing lower here. I should note that earlier in the day, the White House called fake news some reports, more rumors we should call them, that a 90-day tariff review was being considered by Donald Trump. Not true. False reports, fake news. Markets dip right back near their lows of the day with the S&P 500 briefly in bear market territory. Now, we're going to assemble our panel. There's a lot of politics at play, but of course the markets have our focus, and that's where Charlie Pellet comes in with the very latest from World Headquarters in New York. Charlie?
Thank you very much, Joe Matthew. Indeed, you set it up nicely because there was a big swing mid-morning, and we had the S&P 500 index having a 7% intraday move. Right now, stocks lower across the board. Selling continues, down 1.8% right now, with the Dow Jones Industrial Average down 2.4%, NASDAQ down 1.5%. Again, the S&P down 92, drop there of 1.8%. 10-year 4.14%, the 2-year 3.70%. Gold down $64 the ounce, down 2.1%. West Texas Intermediate crude oil trading lower by 1.9% with a $60 handle, 60.83. Bitcoin now down 1.4% below 78,000. Now Bitcoin falling to 77,730. BlackRock CEO Larry Fink interviewed live here on Bloomberg Radio. We wrapped up the conversation moments ago. Fink casting doubts on the number of Fed rate cuts this year.
So this notion that the Federal Reserve is going to tighten, ease 4 times this year, I see zero chance of that. I mean, I'm much more worried that, we could have an elevated inflation that's going to bring rates up much higher than they are today.
And the other key headline out of that conversation, Larry Fink of BlackRock not ruling out another 20% market decline. Well, a market decline is what we got right now, recapping S&P down by 1.8%. Back we go to Washington. Balance of power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Live from World Headquarters in New York, the voice of Wall Street and the New York subway, Charlie Pellet, for better and worse in the markets. We count on Charlie to keep us posted on what's going on here. Keep this number in mind if you're playing along on your home game after everything we've seen today, 4,915. That would meet the threshold on a closing level if the S&P 500 finishes there. That's official bear market territory, and we were there a short time ago, earlier today. 49.81 right now, 49.15 is the number that we're going to keep our eyes on throughout the day here. As Larry Fink, the one and only Larry Fink, the force behind BlackRock, tells Bloomberg, you just heard it live, we're probably in a recession right now. Most of the CEOs I talk with say we are already in a recession. Don't tell the Treasury Secretary that. Scott Besson appeared on Meet the Press yesterday morning to push back on this idea. Listen.
I reject that, the assumption. There doesn't have to be a recession. Who knows how the market is going to react in a day, in a week. What we are looking at is building the long-term economic fundamentals for prosperity that I think the previous administration had put us on a course toward financial calamity.
Let's get into it with our signature panel. Rick Davis is here, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, alongside Democratic analyst Jeannie Sheehan Zaino, senior democracy fellow with the Center for the Study of the Presidency and Congress. It's great to have you both here. As we watch the numbers tick lower, Rick Davis, your thoughts as the White House tries to push back on the idea of a recession. But if you've lost Larry Fink and you've lost the market, where are you?
Yeah, I mean, yeoman's job to the administration for putting out 6 secretaries of the cabinet on Sunday shows, all basically pleading for time. There's a plan, let the plan work. Obviously, the markets are reacting in a way that is the antithesis of being patient with the Trump policy. So I think the circle is getting smaller, right? Fewer and fewer options for the president. More and more pressure for him to announce that he's easing the tariffs before many of them have even gone into effect. You hear out of the White House and out of the president say, hey, we're negotiating with heads of state, with countries that will bring down these tariffs. But in the meantime, our largest trading partner, China, says, hey, we're up for a war. We're gonna retaliate and bring it on. So it is such a mixed bag. It's hard to determine where the future is. And this destabilizing that Larry Fink talked about is really what has, I think, befuddled most foreign leaders. Is we used to be able to depend upon the U.S. and our track economically, especially. And right now, we're the ones who are destabilizing the global economy.
Jeannie Sheehan Zaino, you're the one who's been pointing to Congress in our conversations recently. Where is the answer legislatively from lawmakers who are being cast aside by the president here? It should be their purview when it comes to tariffs. Enter Senators Maria Cantwell and Chuck Grassley up with their bill to require congressional approval on tariffs within 60 days. In the period of time that Larry Fink was talking, Axios came out with a scoop saying that the president is now threatening to veto that bill if it is in fact passed. They say it would dangerously hamper the president's authority and duty to determine our foreign policy and protect our national security. So are we now adding a war with Congress on top of a trade war?
We absolutely might be. I mean, there's no question that this bill is not going to make it through the House. So I don't think the president is going to have to deal with a veto. But the reality is, if it did, he would veto it. Let's hope that Donald Trump was listening very carefully to what you were just playing with Larry Fink, and he has heard how his friends on Wall Street are looking at what he's done. And I have to say, Scott Bessent, I actually felt bad for him over the weekend. I mean, he looked so uncomfortable in that interview, and there's no question as to why. He doesn't know one person outside of the administration who thinks this is a good idea. And he having to sit up there and defend it, it was painful to watch. And yes, the only hope now is that Donald Trump is listening to Larry Fink, Elon Musk, Bill Ackman, and the members of Congress, the Republican Party, who will stand up and say, enough is enough, and take back their power, because under the Constitution, Article 1, Section 8, they control commerce and taxing, and we cannot live in a country where one man has the ability to do what Donald Trump has done over the last several days.
Well, Jeannie points us to Bill Ackman, Rick. We are heading for a self-induced economic nuclear winter, and we should start hunkering down. Is he right?
Well, he echoes a lot of the sentiment that we're hearing from corporate titans like himself, who have been enjoying a really robust economy for the last few years and are now facing a meltdown. So, yeah, he should listen to them. And I think he's more likely to listen to them than his own leaders in Congress, because he's turned a deaf ear to these initiatives that Jeannie was talking about. And I think it's only going to get worse. We can now count, a dozen Republicans who have publicly said that they have to contend with this tariff situation and expect to do something about it, in contrast to what the president's saying. So either the president's congressional affairs folks aren't making those calls and trying to explain to them how this is going to work, and the president's team is not publicly talking about how this is supposed to improve. It's basically trust us. And I've never seen an administration that had such an ambitious policy agenda and then basically told the American people, we're not going to explain it to you. We just want you to trust us.
Rick Davis and Jeannie Shanzano with us here on the Monday edition. We've got a lot more to talk about, and they will be back in our second hour here. We'll also have a conversation with Republican Congressman Frank Lucas of Oklahoma. Ranchers, farmers in his state are calling. Much more ahead on the fastest show in politics. Do stay with us. Markets are lower. The S&P
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
President Trump ups the ante, threatening another 50% tariff on China. Markets resume their declines. Welcome to the fastest show in politics as stocks crumble today after the White House dashed hopes of a 90-day tariff review. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here on Bloomberg TV and radio, the Monday edition of Balance of Power. Kaylee, they called those early rumors fake news. Markets resume their course lower.
Yeah, perhaps the suggestion the White House was open to a 90-day pause was reported erroneously. At the very least, they have now shot that down, indicating that it is still full steam ahead, especially so, apparently, when it comes to China. Unless China takes off the 34% retaliatory tariffs that it announced it will place on U.S. imports, President Trump is effectively saying he will raise the tariff rate on all Chinese goods that come into the U.S. to 104%. That is the level we're now talking about.
Absolutely. And what that will mean for farmers, for ranchers in states like Oklahoma, something that we're going to talk about coming up with Congressman Frank Lucas, the Republican from Oklahoma's 3rd District, will be with us. Kaylee, we heard from Larry Fink live on Bloomberg last hour. He believes we're in a recession right now.
Well, and obviously it's the growth fears and inflation fears that are driving the activity in financial markets. Meantime, other countries are still looking for potential off-ramps here, hence the visit to the White House expected this hour from the Israeli Prime Minister Benjamin Netanyahu, keeping in mind Israel's reciprocal tariff rate is 17%.
I'm glad you mentioned that. That would be our top story on any other day. Obviously, a major visit to the White House here in a news conference. We will be hearing from both of them when they have their Oval Office pool spray with the press pool, and then in the East Room, a formal bilateral news conference that we'll bring to you live here on Bloomberg TV and radio. That's scheduled for a couple hours from now.
That's scheduled for right now. A live check on the markets. We'll send things over to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee and Joe. Indeed, volatile Monday here. Back to work Monday, another manic Monday with the Dow, the S&P, NASDAQ, all very much in the red. Stocks getting whipsawed by a flurry of headlines around President Trump's tariff war, and today's news flow doing little to appease investor concern about the outlook for the global economy. Right to the numbers here with the S&P now down 45 at 5,028. That is a drop of 0.9%. We've got the Dow down 581, drop there of 1.5%. NASDAQ right now lower by 0.5%. 10-year 4.14%. The 2-year 3.71%. And we've got spot gold down $64 the ounce, below 3,000 now. 29.73 down 2.1%. Crude at 61.22 a barrel, down 1.3%. And Bitcoin now down by 1%, 77,945 on Bitcoin. Bottom line here, S&P 500 index extending its sell-off from a record to almost 20%. And we did see a 7% move in the S&P 500 index today. Tesla shares are moving lower. Tesla continuing to slide, dropping below a price at which Commerce Secretary Howard Lutnick predicted those shares would never fall to again. Tesla today is trading lower. Right now, we got Tesla down by 4.4%. Balance of Power continues right now. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, thank you so much, sir. We'll get back to Charlie in about 10 minutes for the latest on Wall Street here. We've got our eyes trained on markets as they are keying off what's happening here in Washington with a lot of news today on tariffs. We walked through the fake news portion already. According to the White House reports, rumors of a 90-day review are just that, fake news. The president, though, taking to Truth Social a bit earlier to threaten an additional 50% tariff on China. And it takes place as Israeli Prime Minister Benjamin Netanyahu pays a visit to the White House today to talk about Israel's higher than expected 17% tariff. They're going to be holding forth in the Oval Office a short time from now, and we'll hold a joint news conference later on. That's where we start this hour with Bloomberg's Tyler Kendall on the North Lawn at the White House. Tyler?
Yeah, hey, Joe. Well, right now we are waiting for Israeli Prime Minister Benjamin Netanyahu to arrive here at the White House. You might be able to see it over my shoulder for our radio listeners. There's currently an honor guard lined up here in the driveway of the White House North Lawn to welcome him as they begin those negotiations. Now, one theme that we're seeing emerge when it comes to the potential tariff negotiations is that it appears President Trump wants to do them in person. He confirmed earlier today that he had spoken to the Japan Prime Minister and that a team of negotiators would be coming to Washington to further their discussions. Now, of course, as you've been discussing, the biggest story today appears to be President Trump threatening this additional 50% tariff when it comes to China. Critical here, our understanding, according to his Truth Social post, is that this levy would be enacted on top of existing levies, the 20% tariff that's already in place against Beijing, and then, of course, that 34% tariff that we are expecting to go into place on April 9th.
Well, in addition, with reciprocal tariffs on all other partners, Tyler, the president also talked about other ongoing conversations with different countries that he is having. Is there any indication from the White House that deals are forthcoming before the Wednesday deadline?
At this point, the White House is holding pretty firm, right? Senior administration officials had confirmed yesterday that more than 50 countries reached out to the U.S. to negotiate. The question being, what will it take for President Trump to get to the negotiating table? He's previously said that he needs to see something phenomenal, right? And what phenomenal means remains to be seen, although yesterday he did give some indication to reporters that they're really focusing in on trade deficits. That could be very difficult for some countries, particularly ones that we rely on for low-cost goods, to end up meeting in order to get some sort of deal done. But Joe and Kaylee, this White House really dismissing investors' fears. I want you to take a listen here to what President Trump told reporters yesterday on Air Force One, saying to hold tight, this is all about long-term gain.
What's going to happen with the market, I can't tell you, but I can tell you our country has gotten a lot stronger. And eventually, it'll be a country like no other. It'll be the most dominant country economically in the world.
Treasury Secretary Scott Bessent yesterday dismissed recession fears, said he's not pricing in one, even as big banks revise their forecasts when it comes to it. And we're starting to hear those Wall Street executives push back, including J.P. Morgan Chase's Jamie Dimon in his annual shareholder note, blasting the policy and saying he hopes to see a quick resolution. Remains to be seen exactly what that will be. But for now, this White House is holding firm.
All right, Bloomberg's Tyler Kendall live on the North Lawn at the White House, where we are seeing on Bloomberg TV the honor guard passing as we await the arrival of the Israeli Prime Minister Benjamin Netanyahu. Thank you so much. Now, as Tyler was alluding to, the administration's response to financial markets, essentially saying that it's not a big deal. We certainly have seen a great deal of volatility, a 7% intraday swing on the S&P 500 today, and we want to get more context as to what exactly is going on in equities. Ryan Vlastelica, Bloomberg Equities reporter, is joining us live from Chicago with more. So, Ryan, obviously right now we're not looking at losses as steep as what we experienced at the end of last week, but we have still seen some pretty incredible moves.
Absolutely. Volatility is kind of off the charts today. We've seen just some enormous swings in companies. There was a rumor today about a potential pause that caused stocks to spike, and then when that was sort of downplayed, we saw them retreat back lower again. Everyone is very antsy. Everyone is, shooting first and asking questions later. Everything is being very driven by headlines, by rumor. It's an extremely volatile market right now.
Conventional wisdom seems to be beware the dead cat bounce. Here, Ryan, I'm not sure your thoughts on this. It was encouraging, even though it turned out to be a rumor this morning, that there was some bid under stocks here. We heard from Larry Fink last hour. He said it's more of a long-term buying opportunity than a selling opportunity, but that doesn't mean the market can't drop another 20%. What would that mean?
Well, people are really trying to suss out what all these tariff implications really mean for the economy going forward. There's a lot more talk about a recession than maybe we even heard, a week ago. I mean, everything has changed very dramatically in just a couple of days. As far as the market is concerned, I mean, we have a company like Apple that at one point today was on track for its biggest 3-day drop since before the iPod was released back in 2000. So the just sheer scale of the selling right now is something to behold. And, it certainly would be possible that we would get some kind of a bounce. Maybe that's a short-term bounce. Maybe this does end up being a longer-term opportunity. But right now, there's still so much uncertainty that it's hard to make any calls one way or the other.
Well, and when we look at kind of regional exposure, if you will, I'm looking at the NASDAQ Golden Dragon China Index right now, down 7 percentage points as the president is threatening a tariff as high as 104% effectively on all Chinese goods. Are there other pockets of the market, Ryan, like that you're watching?
Well, like I mentioned Apple, and Apple is really in the crosshairs of tariffs right now. That's what we are sort of focusing on here. They do so much of their manufacturing in China, in Vietnam, in these countries that are really seeing the brunt of the sort of tariff impact here. And this is a company that we've already been having a lot of concerns about in terms of their growth expectations, their inability to grow as fast as some of the other mega cap peers. It was already trading at a valuation that was seen as elevated by historical standards. So there's really a lot of reason to be selling a stock like Apple right now. And there's sort of fewer reasons to buy unless you are taking a longer term kind of point of view. But I would say a lot of these companies, especially within big tech, people remain pretty positive on them in terms of their cash flow, their balance sheets, their dominance in the markets they operate in. So you will certainly find people who remain optimistic about big tech. But I think right now the short term is so uncertain that everyone is, like I said, just extremely cautious and very prone to be selling.
Ryan Vostelica, Bloomberg Equities reporter in the teeth of the sell-off. Ryan, we thank you so much. Kaylee, it's pretty remarkable to see the VIX back above 50 here this morning. The number that we're looking at, by the way, on the S&P 500, 49.15, a closing level would in fact mean a bear market joining the NASDAQ, which did such last week.
Yeah, a decline, of course, of 20% or more is what would codify that bear market. And it's incredible because we have seen over the last 2 days, at the end of last week, of selling in the equity market, investors seeking haven in the treasury market, and yet that's not what is happening today. We're actually up 14 basis points on the 10-year yield right now at 4.13. So you're seeing selling in stocks. You're also seeing selling in bonds, and I wonder what that signals investors are anticipating about whether or not we will likely get a response from the Federal Reserve to this volatility and economic uncertainty.
Larry Fink was pouring a little bit of cold water on that. I'm just thinking that the market's got a bit over its skis, expecting 4 cuts this year. Congressman Frank Lucas is looking at all of this just like the rest of us are. He is the Republican representing the 3rd District of Oklahoma and joins us now live. Congressman, it's great to have you back on Bloomberg TV and radio. This story has evolved a bit since we last talked about it, and I wonder from your standpoint, and if you put your rancher hat on in Oklahoma, if you're hearing a consistent message from this White House and if you support this course of action.
Clearly, the president believes he's going to stay the course. He's determined to change the way we do trade and business around the world. He's using a sledgehammer approach of tariffs. My folks in Oklahoma are still overwhelmingly supportive of the president. We'll see over the course of the coming hours or days what kind of response we get from our trading partners or competitors around the world. But what choice do we have other than to pursue this for the time being and hold the faith when it comes to the market?
Well, being supportive of the president is one thing, Congressman. Being supportive of this specific policy from the president is another. Are your constituents telling you they're on board with tariffs of this scope and scale?
My constituents are holding their breath. 80% of the cotton we raise in this country plus is exported. 40% of the winter wheat we raise in this country is exported. All the hogs we raise in Northwest Oklahoma get on ships to go to Asia. So these issues are very important to my constituents, but they also understand the status quo for the last 3 or 4 decades has worked against us. And here comes President Trump, prepared not to accept the status quo, but to plow through. Now, we will see over the coming days and weeks and months. I have faith that the president and his inner circle of advisors will make the necessary strategic adjustments if there are strategic adjustments to be made. But let's just take a breath and try to work our way through the next few days. Because after all, if you put the money in the market 2 years ago, from a stock market perspective, you're still several thousand points ahead as of this moment.
Well, to the point that you're making about your district, Congressman, a report by the U.S.-China Business Council found indeed that Oklahoma's 3rd District was the 3rd largest recipient. China, rather, was the 3rd largest recipient of your global exports, which you just described here, $154 million in gross sales. How do you quantify what's about to happen here to local business?
Well, if you look at 4 years ago, when we had the first taste of the trade wars, President Trump responded by urging Congress to provide additional assistance to farmers to weather the storm. And he also negotiated a deal 4 years ago with the Chinese to buy an additional $50 billion in U.S. agricultural products. I'm not sure exactly off the top of my head how well the Biden administration followed through on that, but he remembered who his supporters were and he stood with us. We'll see this time, but you have to have faith. We'll see in the next hours, days, weeks what happens. But movement, it would seem, from our trading partners around the world, might, the president says he's had inquiries from 50 different countries wanting to address the tariff issues. Again, this is a sledgehammer approach, but the system has generally worked against us from a manufacturing point of view for decades. Let's give it a try.
Congressman, one of your Republican colleagues in the House, Congressman Don Bacon, has introduced legislation that looks a lot like the legislation, bipartisan legislation that was introduced in the Senate, essentially requiring congressional approval of the president's tariffs. The White House today has issued a veto threat on that Senate bill that was co-sponsored by Senators Chuck Grassley and Maria Cantwell. Why veto something that is actually technically, according to the Constitution, just you guys reclaiming Article 1 authority that you're entitled to?
Well, I'm very jealous of congressional power under the Constitution. I'm not sure how we got to this point of delegating this much to the president. It is a discussion that has to be had. I'm not sure that right now in the depths of the trenches, economically, is the battle is the place and time to do it.
Just want to mention a breaking headline here on the terminal, Congressman. It appears that President Trump's news conference that had been scheduled for a couple of hours from now with Benjamin Netanyahu has been canceled. They are going to take some questions, I want to be clear, when they meet in the Oval Office, but we're not going to have the formal bilateral news conference that we had expected. Congressman, that's just part of the story today that we're following with regard to these tariffs. And as Kaylee mentioned, now you've got essentially a veto threat coming from the White House here. Do you worry? Is your worst case scenario a war between the White House and the Congress on top of a trade war?
I would tell you, Joe, my biggest concern just this moment, in addition to tariffs, in addition to trade wars, the House needs to pass the budget resolution that the Senate has passed with our separate instructions so that we can get on with reconciliation, addressing the national debt, addressing spending, making sure that we don't have the most dramatic increase in taxes at the end of this year and the effect that that would have on the entire economy. There are a lot of pieces in play right just this moment. We need to focus.
Well, of course, one of your focuses, sir, is you chair the new task force on monetary policy, treasury market resilience, and economic prosperity. And given how keyed in the market seems to be to the words of Federal Reserve officials around this, I wonder if you are anticipating we may see intervention from the central bank. Because right now, at least in terms of market functioning, everything looks like it is acting appropriately. The systems are working. And short of that, is there really a need for Fed intervention here that you see?
Well, I have faith in Chairman Powell and the entire Board of Governors of the Federal Reserve System. I think they, using that the spirit of the 1913 Act, will make the appropriate decisions on interest rates, in effect, monetary policy. We'll just have to see over the course of the days. This is a world where we seem to live moment by moment, not day by day traditionally, but we'll see where they go. And by the way, on the task force, our next hearing this week will address U.S. Treasury debt in the monetary system. How do you market, how do you sell all of the Treasury notes, bonds, and bills into the market when you have 7, 8 times more paper than we had 20 or 30 years ago, and you have half the market makers? This will be an introduction to an introductory meeting so that the members of the task force can come up with speed with experts in the field. But yeah, you talk about timing, critical nature, a task force focusing on the Fed and Treasury debt. I can't imagine 2 more important issues for the long-term and intermediate and short-term future of the country than that.
Well, when we think about the short term, Larry Fink was talking to Bloomberg last hour. You might have heard the conversation, Congressman. He's casting doubt on what the market sees as the likelihood of several, maybe 4 interest rate cuts this year, even though he says we're probably in a recession right now. If that's the case, how about an emergency rate cut today?
That's not really a position for me to take a side on, but I will simply say this. A lot of the challenges we face right now have to do with the Biden administration's overstimulating the economy with spending 4 years ago, and we're dealing with a hangover from that. Balancing where we are, interest rates, capital investment, the trade issues. It's a challenging time. I would not want to be the chairman of the Fed or for that matter on the board of directors. And we can all offer advice and independence, but it's still a body based on its own insights that makes the decision.
Well, if you don't want to be the Fed chairman, Congressman, I wonder if you envy the speaker this week as well, because he's going to have to push through the Senate resolution, which you were speaking to just a moment ago, that looks different than what you and your colleagues initially passed in the House. And already there are a number of Republicans who have suggested they can't support this, given how drastic the difference is in terms of the spending cuts that are outlined. Are you confident that you actually can get this thing passed before the Easter recess?
Well, let me put it this way. With the challenges going on right now, whether it's the trade wars, the stock markets, all of the bond markets, all of these issues, we in the House Republican Conference have to show forward momentum. We have to demonstrate that we can get our work done. We can get to reconciliation. No matter what the instructions say, it will be that final document put together by the various committees that create the savings that move the process forward. If we can't take that step, then that is the kind of thing that could potentially have a dramatic psychological effect on the market. I've told several of my colleagues, we need to do our work and do it on time this week. We cannot go home for Easter until we've addressed the budget resolution. And if we don't do our work, the market may explain to my colleagues why we have to do our budget and reconciliation work.
All right, we'll leave it on that note. Congressman Frank Lucas, Republican representing Oklahoma's 3rd District, joining us here on Bloomberg TV and radio. Thank you so much. And as the congressman speaks to the markets, I would point out we actually just flipped back into positive territory on the NASDAQ 100. Let's get a closer look now with Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lyons. Indeed, it has been that kind of a day. Volatility is the big theme right now. Let's get right to the numbers here because we got the S&P little changed, down 30 points right now at 5,044. The Dow Jones Industrial Average down 478, down 1.2%. For the S&P now a drop of 0.6%. Let me put this move in perspective. At one point, though, we had a 7% intraday move on the S&P. That is the biggest since 2020 when COVID upended markets around the world. NASDAQ now lower by 25, down 0.2%. The Russell 2000 index of small cap shares lower by 0.9%. The 10-year yield at 4.16% with the 2-year currently yielding 3.73%. Gold is down $71 the ounce, back below 3,000 at 29.66. Spot gold down 2.4%. West Texas Intermediate crude 61.18 a barrel, down 1.3%. And Bitcoin now with a $78,000 handle. Bitcoin is lower by 0.9%. President Trump has ordered a review of the potential sale of U.S. steel to Nippon Steel, opening the door to amend the decision by his predecessor Joe Biden to block the transaction. Nippon Steel up now by 0.4%. The ADRs. U.S. Steel is up by 11%. So again, recapping, we've got a volatile stock market again today. Big swings. S&P right now down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Back we go to Balance of Power. Once again, your hosts Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we're keeping an eye on the White House as we anticipate the arrival of Israeli Prime Minister Benjamin Netanyahu, who's set to meet this afternoon with President Trump. The one item that was previously on the schedule has now been removed. There will be no joint news conference in the East Room as was previously planned. So for more on that, we go back to the White House where Bloomberg's Tyler Kendall is joining us once again. So Tyler, it's still going to be an opportunity for them to take questions, I guess, just in a different venue.
Yeah, hey, Kaylee. Well, it is breaking news per a White House official. No more press conference at 2:30 p.m. Eastern. But as you say, we are still expecting the Israeli Prime Minister to arrive here at the White House shortly, and they will still hold that bilateral meeting in the Oval Office. Typically, how this works is that they are open at the beginning to press to ask some questions, and we get that footage back live. So we'll have to see. As of now, that does still appear to be on the table. We are still waiting for an exact reason as to why that press press conference ultimately was canceled. Now, we know, of course, that tariffs are still expected to be a top topic today. I was here yesterday when Israeli Prime Minister Benjamin Netanyahu did arrive here in Washington. There were reports that he had already started the negotiations with some top senior administration officials when it did come to the tariffs. As you well know, Israel had lifted most of its tariffs in the run-up to April 2nd in a bid to try to get ahead of it, try to strike a deal early, and they still were slapped with that 17% levy. Now, our Bloomberg News reporting, according to sources familiar, say that Netanyahu had called President Trump on the phone to try to negotiate a deal. President Trump told him that he should come here in Washington to negotiate in person, and that is how this visit was spurred today. So we're still going to have to wait, see further details, other things that we know, other agenda items, of course, the ongoing war with Hamas and shared concerns when it comes to Iran.
Bloomberg's Tyler Kendall live at the White House, shoulder to shoulder with the color guard as we anticipate the arrival of Benjamin Netanyahu. As Kaylee mentioned, the joint news conference has been canceled. We will hear from these two leaders in the Oval Office, and that's where we begin with our signature panel today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist, partner at Stone Court Capital. Jeannie, Democratic analyst and senior democracy fellow with the Center for the Study of the Presidency and Congress. It's great to have you both here. An important day for the markets, an important day at the White House, Jeannie. To know that this news conference has been canceled gives the White House more control over the conversation with reporters. I'm wondering your thought on the strategy here, because reporters will be allowed in the Oval Office, but that's a very different affair than having a formal news conference in the East Room.
It absolutely is. And for somebody who for the last 3 months has been speaking to reporters openly day after day after day, sometimes multiple times a day, as you both know, this is quite a switch for them to cancel this press conference. But I always wondered about this press conference. How could you have Benjamin Netanyahu standing up there talking about negotiating these tariffs out, while Donald Trump yesterday and the day before is saying this is a revolution in the country to revive the manufacturing base? It cannot be both. You can't both revive the manufacturing base and negotiate with a foreign country. And so that is the sort of conundrum that Donald Trump has himself in on what are the goals of this tariff policy. So I always thought it was going to be a very strange press conference to have them both up there. And I think that they are still not sure how they're going to move forward. And that's why we're seeing the cancellation.
Well, but to Jeannie's point on whether or not this is a negotiation, Rick, you also have the president at the end of last week talking to the leader of Vietnam, who said he would drop all tariffs on U.S. products. You have Japan apparently in conversation with the president today. So clearly talks are ongoing. And as we have an eye here on Bloomberg TV and on YouTube on the White House, we see President Trump awaiting another conversation as the vehicle has just pulled up with the Israeli Prime Minister Benjamin Netanyahu inside it. We're now seeing, Joe, those two leaders shaking hands.
Yeah, quick handshake under the portico. This is not a formal arrival on the south portico, but they're in fact right at the entrance of the West Wing, both wearing matching suits today, it looks like.
Red ties.
Benjamin Netanyahu got the cue on the red tie. Indeed, they are now heading back into the West Wing for an Oval Office meeting. Around the top of the hour, we expect to have an ear on that.
Yeah, one of the questions reporters just attempted to shout at them, will you discuss tariffs on Israel? I think we know the answer to that question, as we understood that is one of the primary objectives of Netanyahu's visit today, is to have that conversation. But if that conversation is happening, Rick, do we not define that as negotiation?
Yeah, I think by definition, him being here and the tariffs are going to come up, that's a negotiation, because clearly that's what Donald Trump wants it to be. All weekend we had cabinet members hitting Sunday shows saying, hey, we're going to work out deals on all these things. Be patient. Let us do our work. Don't overreact to the tariff regime. All these numbers, Treasury Secretary Bessent said, this is the high water mark. Everything is going to come down from here. And so why not have your closest ally, one of your best friends as a head of state, come to Washington, sit down in the Oval Office and work out a deal? I would be stunned that this visit does not result in some kind of good news about a reduced tariff between Israel and the United States, because that is what the White House desperately needs. Frankly, they need it worse than Bibi Netanyahu needs. And so I can't imagine this isn't the beginning of a series of announcements that said, see, We told you, just give us time. We're going to work out deals that are going to benefit the U.S. manufacturing, and supply capability.
Is that going to be the rollout here? Jeannie, we heard from any number of administration officials yesterday giving us a bit of a confused idea on this. Peter Navarro, as recently as this morning, was talking about raising revenue from tariffs. He referred to them as tax cuts. But if you show up with a bunch of deals this week, we understand the phone was ringing all weekend. The president talked to Japan this morning. Now it's Israel today. Obviously, this isn't going to be a revenue generator. What's the market going to make of that?
Yeah, I mean, it is the uncertainty about what this is all about that continues. And while Donald Trump was winning, if you guys didn't hear, he won, as he said 5 times, the golf tournament this weekend. He sent all these folks out on the Sunday shows that Rick was talking about with mixed messages. Some of them talking about these 50 countries who are trying to negotiate. Then you also had Lutnick saying, no, there's no room for negotiation. So to me, there are 2 things here. Number one is there is a big break in the administration. You have some folks who have a more traditional view. This is negotiation. It's temporary. It's going to be over. Just wait and see. Bill Ackman, don't worry. Everything will be okay. And then you have other people like Howard Lutnick and like Peter Navarro who are saying, no, this is a remaking. And Donald Trump himself talks about a revolution this weekend. And that's the problem with Rick's hope that they come out with a deal. If you are a revolutionary and your base is waiting for you to bring manufacturing back and reshore, help all these forgotten men and women from this globalized economy, how can you then be negotiating out deals with your allies or your enemies? The 2 don't go hand in hand, and that's the problem, and that's what's creating all this uncertainty.
Well, and we know the markets don't love the uncertainty. Rick, it was interesting. There was some erroneous reporting earlier today, a suggestion that the White House would be open to a 90-day delay on tariffs. Saw the markets rally dramatically off the back after what opened, after opening in pretty steep loss territory, a 7% swing. And yet the positive reaction in the markets immediately slapped down when the White House itself pushed back and said that was fake news. What does it tell you that an opportunity to maybe alleviate some of the pain we've seen in the equity market was not one that the White House decided to take? Does that suggest that they do want to be seen as credible on this?
Yeah, look, I think in order to be able to get the kind of deals they want to get from a negotiated posture, they've got to show their resolve. And the idea that we're going to kick the can for 90 days maybe had been talked about and someone leaked it who didn't know the final conclusion. But the bottom line is it actually shows how quickly the market is prepared to respond to any good news from tariffs. And so that's why I think they're going to roll out a series of, quote, progress reports on these tariff regimes, because they know that they've got an issue with getting into these, sort of recessionary levels in the market. And they're going to try and put their finger in the dike on this one. It does not do this administration any good to have the markets collapsing while they're trying to implement this weaker dollar, more tariffs, reset of the global economic program. And by the way, let's be clear, that's what this is. It's not just a tariff regime. They are restacking the global priorities based on what the strengths are of the U.S. economy and not anything else.
It's interesting that we're having this conversation after hearing from Bill Ackman, from Jamie Dimon, from Larry Fink today on Bloomberg. Jeannie, I wonder, you heard the veto threat from the White House earlier, this idea of passing a bill that would require congressional approval after 60 days on tariffs. Veto threat to the Speaker of the House, his ally. But it is, in fact, the CEOs and the executives who appear to have his ear. Is it the Ackmans and Dimons of the world who pulled Donald Trump off the course on more tariffs?
I really hope so. Somebody has to. I mean, I think there is a lot of wishful thinking here, but let's take a step back and remember, there is only one thing Donald Trump has been committed to publicly, and that is this tariff regime. It is going to be very hard for him to walk away from that. That is going to require the Larry Finks, the Jamie Dimons, the Bill Ackmans, quite frankly, the Ben Shapiros of the world. All of these folks, Elon Musk, out there saying this is a problem. And then, of course, Congress has a role. And I think we can't forget the constitutional role of the courts here, because the way in which the president did this to declare a national emergency based on a trade deficit that we have had since the 1970s is highly constitutionally questionable. So those are the three groups who have got to get to the president and walk him off this ledge. But I think it's going to be tougher because the president has long been publicly committed to this. He's not particularly intellectually curious. And so all the people who are saying this makes no sense, he's out playing golf and $1 million a plate golf tournaments this weekend.
Mm-hmm. To Jeannie's point on the role of Congress, Rick, in our final minute here, the White House, of course, issuing a veto threat of the bipartisan legislation that has been put forward in the Senate to claw back some congressional authority on tariff approval. Does that effectively kill that effort, or might they pass it anyway?
Yeah, it would be hard to get it on the agenda in the House of Representatives with a veto threat from the president. I think the speaker is still very much in league with the president on his priorities, even though I think they all are looking over their shoulder at the 2026 elections and what impact a declining market at the hands of Republicans is going to look like when they try to run for re-election. So there's a real tension right now in the House of Representatives about trying to maintain a majority through the midterms and still be able to do the bidding of Donald Trump. He's making them walk this plank. And I don't see any distance between the speaker and the president at this point that's going to cause a revolt by Republicans in the House.
Yeah, and the speaker's going to be preoccupied trying to advance budget matters this week anyway. Rick Davis and Jeannie Sheehan Zaino, our signature political panel, here with us on Balance of Power. Thank you so much, as always. And just to reiterate, we did moments ago see the Israeli Prime Minister Benjamin Netanyahu entering the White House for a conversation with President Trump. They will be answering questions later on from the Oval Office. No Eastern News Conference, though. We'll have more next on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index back in the green. Been that kind of a day. Volatile trading session. S&P 500 index now wiping out earlier losses. For now, up by about 0.1%. We have got the NASDAQ Composite Index up 43. Dow Industrials down 290, a drop there of 0.7%. And the S&P right now just dipping back in the red, lower little change, down by a point. Bottom line here, waves of volatility shaking Wall Street anew. We did have the S&P 500 index briefly crossing the threshold of a bear market. We also saw an intraday move of 7%, and that was the biggest since 2020 when COVID roiled the globe. 10-year at 4.17% with the 2-year 3.74%. Gold is now down $73 the ounce. Spot gold down 2.4%, $29.64. West Texas Intermediate crude down 1%, $61.32 a barrel. And Bitcoin now down 0.3%, 78,600 on Bitcoin. Analysts at Morgan Stanley have cut their view on large and mid-cap banks on the rationale that President Trump's tariff policy increases the risk of recession and threatens to prolong any material resurgence in capital markets activity. Big banks will be reporting at the end of the week. JP Morgan Chase, that stock up now by just about 2%. Also on Friday, Wells Fargo up 1.6% next week. Citigroup up 0.5%. Bank of America up by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with the latest look at the markets. Thank you so much. As it stands right now, as Charlie just mentioned, does look like the S&P 500 may be able to escape bear market territory today, though we have more than 2 hours to go until the close. But it's also no question whether or not there still could be further losses from here amid ongoing concerns about President Trump's tariff policy. And you're starting to hear some of the biggest titans of Wall Street weighing in on that question and others, including the chair and CEO of BlackRock, Larry Fink, who actually sat down with our colleague Eric Schatzker earlier today at the Economic Club of New York and had this warning about how much further we could fall.
Obviously, markets are down 20%. So some stocks are down over 30-40% from their high water marks of just from January. But in the long run, I would say in the long run, this is more of a buying opportunity than a selling opportunity. That doesn't mean we can't fall another 20% from here too. But I do believe over the long run, the vitality of the United States will persist.
Another 20% from here. Got quite a groan in the room, and that's where we start our conversation coming up right now with, where are we going here?
Mike Regan.
Mike Regan is with us, forgive me, at World Headquarters in New York. Thank you, Kaylee, as we keep our eyes trained on the stock market. Bloomberg Senior Editor Michael Regan, what do you think of this next leg lower? We were actually in positive territory for a spell. The White House helped to knock that down with this fake news blast because there were some rumors earlier of a 90-day review. Now we've been bouncing around the flat line. We're a little up, little down. How would you describe the psychology of the investor who's daring to dip into these waters?
I think it's just not quite unprecedented, Joe, but really close to unprecedented as far as, call it the last 25, 30 years of this market. I mean, to see an intraday swing in the S&P 500 of more than 8% from bottom to top, I mean, that just doesn't happen. It happened in the 2008 financial crisis a bit. We had something similar in the COVID era market, but this is such an unusual event to see that type of intraday volatility in the market that I think it just goes to show that no one really knows how to trade this market, how to price this market. Obviously, Donald Trump has made himself very unpredictable about when it comes to trade policy, and that is just making it impossible for investors to wrap their heads around what the fair price of this market should be, given all that uncertainty. I do think, Kelly pointed out that 20% drop. We are flirting with that 20% bear market level from the market's last high in February. That is a nice round number that a lot of investors keep an eye out for potentially buying the dip or the massive plunge in this case that we saw at the end of last week. A lot of the sort of technical indicators that technically minded traders keep an eye on are in that oversold territory that might make them convince them that it's worth taking a risk here and buying around this 20% level. But really, the longer term it all depends on how quickly we get to the other side of these tariff negotiations. I think part of what's giving the market some comfort today is there is a bit of a drumbeat of news from the White House saying, look, we're holding talks. Everyone wants to call us. We're getting good offers from countries around the world. So there does seem to be an effort from the White House to sort of stop the bleeding to some extent and to tell investors, look, we are trying to make some deals here with these other countries. But then you come out and you see Trump, posting on social media that, we might add 50% more tariffs on China. And it's just really, really perilous for investors trying to figure out where the bottom of this drop is, Joe.
Mm-hmm.
Well, and it's one thing to look at the activity in the equity market, but the bond market is also kind of stunning today. We're now up 18 basis points on the 10-year Treasury yield at just shy of 4.18, up 19 basis points now, Mike. And I wonder if that is just the selling pressure finally coming for bonds after the last few days, or if that is telling us something significant about whether or not the market expects that the Federal Reserve is going to get involved in the short term here.
Yeah, Kelly, I think the market is really trying to struggle to figure out what the signal from the bond market is today. It's possible, when you have this much turbulence, people sell what they can, to meet margin calls and that sort of thing. It's also possible, the inflation implications of these tariffs are a concern for many people, as is sort of the reaction from governments that hold treasuries around the world who might not be thrilled to be hit with these tariffs and potentially some speculation that they might start selling some of those tariffs. So there's so many different variables going on. It's really hard to sort of put your finger on exactly what is causing that bond market movement. But it is, I think, catching a lot of people by surprise that when you see this sort of risk off that we saw in the morning in the stock market, typically that is associated with a rally in bonds and lower yields. And we're just not seeing it today. And I think it's just one of those wild markets that doesn't make a lot of sense. And you can't really attribute your typical fundamental drivers to what's going on in the price action that we're seeing.
All right, Mike Regan, Bloomberg senior editor, thank you so much. Right now, if this holds with a 20 basis point move upward on the 10-year Treasury yield, that would be the single largest single-day move up in yields since September of 2022. Pretty incredible to see that. And we want to get more on what's happening, not just in these markets, but what markets are signaling about the forward look on the economy. Betsy Stevenson is joining us now. She's professor of public policy at the University of Michigan, also former member of the Council of Economic Advisors during the Obama administration. Betsy, welcome back to Bloomberg TV and radio. As we consider here the idea that President Trump today has floated even higher tariffs on China than previously thought, potentially reaching 104% with this current regime, assuming there is no backing down. Is this a greater inflation risk or a growth risk to you?
Oh, boy, that's a really hard question. I think that's why no one knows what the Fed's going to do. There is clearly an inflation risk, and we know that these tariffs are going to bring inflation. Of course, that what they bring is a one-time jump up in prices, and so the Fed has to ask, can we look through this period of inflation? Can we say transitory again, ignore it, and then focus on the growth? Because there's clearly going to be a big hit to growth. The challenge I think that the Fed has is that it's just not 100% sure what it should be doing. Does it want to try to stimulate demand in this environment? Does it want to slow demand down? If I was there, I'd be more worried about the risk to growth because unemployment has long and permanent effects. So I would really be focused on that. But equally, I think what they're going to have to be looking at is not what do people expect for inflation this year. We all know inflation is going to be higher this year. But what do we expect is going to happen to inflation in 3, 4, 5 years? And we have very fragilely anchored inflation expectations right now. If they see that fragility getting even worse, I think they're going to have to turn to making sure that they keep those anchors in.
We heard from Kevin Hassett over the weekend. He did Sunday morning television, Betsy, and suggested that the phone is ringing off the hook at the White House. And if you listen to what he said, you might envision a world where there are no tariffs in the near term. Let's listen.
The fact is the countries are angry and retaliating. And by the way, coming to the table, I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply.
What's your thought on that? We know that the president spoke with Japan earlier today. He's meeting with Benjamin Netanyahu now. We get to the end of the week. Let's say these 50 leaders cut deals with the president. Does he look like a genius? Markets up 1,000 points?
No. So let's start with the simple thing. Look, I don't even think Kevin Hassett believes what he was saying. Why are countries coming to the table? Not because they think they're going to absorb the price increase, but because when prices go up all around the globe, we all sell less. The stock market is not falling because they're worried about having to pass through prices onto consumers. It's that when you pass on high prices, if the price of Nikes goes up 30%, you know what people are going to do? Buy fewer Nikes. And so even if they're passing all those prices on to consumers, it's not good for Nike profits because people don't buy their product. And that's what countries all around the globe are worried about. It's about the shrinking of trade, not about who's paying the prices. The American consumer pays the prices, and the administration even believes that they pay the price because they're talking about the great, gain in revenue they're going to get from these tariffs. So they know that the tariffs get paid here, that it's not going to show up in terms of hurting some other country. So then you said, well, wait, could Trump be the genius who eliminates tariffs? Tariffs were incredibly low before Trump started all of this. I think the reason he has shocked markets so much is because everybody thought, oh yeah, maybe we're going to get 3, 4, 5, 6% tariffs. That's going to be a huge increase compared to the past, but not these numbers that are like, early 20th century tariffs. Nobody expected them because they are enormous. No other country has them. Calling them reciprocal tariffs is completely misleading. Vietnam is not charging us 46% tariff, which is what we put on them. They're charging us like a 1.5% tariff. So is he a genius if that 1.5% tariff goes away at the cost of all the turmoil he's caused around the globe? I don't think so.
Well, one of the things he argues is that this brings back more manufacturing to the U.S. My question, Betsy, is when you consider that there's tariffs on actual raw materials like steel and aluminum, potentially lumber coming down, what impact that would have on actually the ability to build out that infrastructure, let alone to find the labor force to build those factories or populate them ultimately when construction is done, given some of the other efforts around migration specifically in this country. How easily can it realistically be achieved if some of those barriers are put into place?
Everything you said is exactly right. And then let's add on top of that, that it takes several years to build a factory and get it up and running. We're not talking about building factories in the United States where we assemble Nikes. We're talking about paying more for Nikes. Even if he's talking about protecting American manufacturing, he is hammering the American auto industry with this. They are suffering more because of all of the tariffs on the components of cars. Look, we cannot have a car or even a bicycle without imports because we don't have rubber in the United States. So what are we supposed to do to actually move that car down the road if we don't have wheels? It's just not, it doesn't make any sense. If you want to support American manufacturing, you don't do it by making all the ingredients in American manufacturing more expensive.
Betsy Stevenson was ready for this conversation, professor of public policy, economics, University of Michigan. It's great to have you back on Bloomberg, Betsy. We'll be deeply curious to see, Kaylee, what the University of Michigan Consumer Sentiment Survey says at the end of this week as we really start to bump into the corrosive impact here, the emotional impact of these tariffs on the markets and consumers.
The question is, even if you see sentiment further falling off a cliff and inflation expectations rising, does it move the White House that is standing pretty strong on its policies, at least for now?
Depends on who's talking and when. We'll hear from Donald Trump and Benjamin Netanyahu a bit later, and we'll bring it to you live here on Bloomberg TV and radio.
is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Good afternoon, everybody. It is a Bloomberg Business Week Daily, live on TV, radio, YouTube, and Bloomberg Originals. I'm Tim Stenevec, along with my co-hosts for the day, Bloomberg TV's Romaine Bostic, Carol Masser, is out. Romaine, quite some volatility today.
Yeah, she's missing a lot today. In fact, we talk about that volatility spike that you had overnight in the overnight hours, VIX going up to 60. But more importantly, the swings that we've seen in the cash session today, Tim, absolutely bonkers. We were down 4.7% at one point in the S&P 500, up 3.4% at one point on the day, now still holding in the green. But this is going to go down. It's probably one of the most volatile days we've seen going back to 1987.
Okay, certainly going to be one of the main themes of our broadcast this afternoon. In the meantime, if you're looking up for a port in the storm, listen up, because Bloomberg Intelligence's Gina Martin-Adams has got you covered.
Also, Tesla under pressure here on this day, one of the biggest bulls slashing his price target. He's going to be joining us in just a bit.
And when he speaks, Wall Street listens. The details in Jamie Dimon's 58-page letter to shareholders.
Did you read all 58 pages?
I did not. Okay. I confess I did not, but fortunately
I
Sally Bakewell did.
Yeah.
So
all right.
There are a lot of charts and graphs, though, too. So it's like, you know, not
I like
totally
it. Picture
58
books.
pages.
Love it.
Yeah, exactly. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, Charlie Pellet has all the details of the trade. Hey there, Charlie.
Thank you very much indeed. Fast-moving markets, which is precisely why you got to keep it locked into Bloomberg Television and Radio. And guess what? As I speak, Dow Industrials just turning positive. Clean sweep now. Dow, S&P, NASDAQ. However, volatility remains. There we go. Dow back in the red. Little change right now. S&P up 35. Gain there of 0.7%. NASDAQ Composite Index up 172 now. That is an advance of 1.1%. The Dow swinging between gains and losses. At one point, we did have a 7% intraday move on the S&P 500 index, the biggest since 2020. Our Gina Martin-Adams will have a whole lot more on the equity markets for you coming up in just a moment. Your 10-year right now at 4.15% with a 2-year 3.73%. Gold down 2.3%, $29.69 the ounce, trading below $3,000. West Texas Intermediate crude just above $61 a barrel, down 1.2%. And Bitcoin higher, little changed, up 0.2% right now, 78,956 on Bitcoin. Eli Lilly shares lower after the Trump administration spiked a plan late last week to pay for obesity drugs for Medicare patients. Eli Lilly shares, they are trading lower by 2.1%. Rival Novo Nordisk, also in the weight loss business, up right now by about 2.3%. Recapping big swings for the equity market. I told you moments ago that the Dow was little changed and higher. Right now, we've got the Dow Industrials down 140, a drop there of 0.4%. S&P up 0.4%. Volatility, the name of the game. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Hey, we are keeping an eye on everything happening in Washington. So just a quick note, the president was scheduled at 2 o'clock to meet with Prime Minister Netanyahu of Israel for this bilateral meeting. We bring you comments from Washington as soon as we do get those. They did have a press conference scheduled for 2:30, though that has been canceled according to the White House. In the meantime, back to today's trade, because as Romaine mentioned, it could be the most volatile session going all the way back to 1987. Investors, though, bracing for another bumpy week. And yes, it's only Monday. This as a result of the full-fledged trade war, concerns it'll sink the economy into recession. Some strategists are predicting a further drop still in the S&P 500. Gina Martin-Adams is Bloomberg Intelligence Chief Equity Strategist. She joins us here in our Bloomberg Business Week studio. Gina, you and the team continue to expect the U.S. equity market outlook to be impacted most severely by the tariff announcements last week. I want to get to the vulnerability of the U.S. equity market in just a second. Before that, though, the volatility that we've seen today. How are you watching that?
Pretty shocking. You know, frankly, the concern I have is that usually volatility spikes that are affiliated with recession happen at the beginning of the sell-off, not at the end or midway through the sell-off, and we don't have any imminent policy support emerging. So what you typically see, if you think about how sell-offs manifest themselves, such as the one from in the tech bubble bursting or the great financial crisis or even the 2020 correction, at major lows, you usually have a VIX spike, huge VIX spike, because finally the panic is in. But then you also usually have some kind of policy reversal emerge. Right. Especially in the great financial crisis in 2020, this was very evident. You had major federal supports emerge in the form of monetary policy, reversals and infusions of capital, and you had fiscal policy support emerge.
Yeah.
So those two things are the missing links here. We're starting to see the VIX move. We still have yet to really price in any sort of material recession risk, but that may be coming. I'll defer to our economics team on that. And then when are we going to get our policy support has got to be the biggest question mark on many investors' minds, which I think is why you get things like this morning. Even just the idea that you're going to have a 90-day reprieve here
that's
was
what I'm
greeted very
curious about,
kindly.
because we talk about policy support. That big reversal we saw was on the rumor that there was some degree of policy support in the way of a 90-day reprieve that the White House later said was fake news in their words. Who knows exactly where that comment actually originated from. But what does that tell you about market psychology?
Yeah.
That you can get effectively an 8+ percentage point bump off of the lows, off of one single tweet, from an unverified social media account that the White House then threw cold water on in a matter of minutes.
Yeah, it's a little bit terrifying, honestly, because there is so much rhetoric out there that Trump will eventually cave. And that is the prevailing wisdom in markets right now, not that this is permanent. And we're still trying to work through the aspects of, if it is really permanent, what does that mean?
Yeah.
But there's so much reticence to do that.
I know you're not a Washington person, but why don't you think that the White House or anyone there maybe tried to capitalize on that move higher? I mean, isn't that a sign that, hey, the market's willing to re-embrace this market, the economy and everything in between, if you do get that reprieve? And they were basically made it clear, at least for right now, they're not going to do that.
Yeah, I mean, well, very clearly, this is an ideological environment, right? This is an ideology. This is a very strong commitment on the part of the White House, but Wall Street doesn't like it. And so Wall Street is going to defer to, if we don't like it, we can change the president's mind. And maybe that's what's manifesting itself in markets, is the ultimate narcissism of Wall Street, thinking that they can overwhelm anything. We can get what we want out of this. I don't know. I think it's a really fascinating environment right now. But what I will say is the longer this goes on, the worse it is for the earnings outlook. We already started to see enough deterioration in the economy to imply that the earnings outlook for the next 12 months is no longer for growth, may even be for contraction. Some of our leading indicators are saying we're not going to get any earnings growth over the next 12 months, and yet the analyst consensus is still sitting at 10. The implied market expectation for earnings growth is still north of 15, even with last week's corrective process in our work.
Okay, so maybe we'll learn a little more starting on Friday when we get JP Morgan, Wells Fargo, and Morgan Stanley results, and then next week with more banks, especially Bank of America I'm interested in with the look on the consumer.
Yep.
Before we get there, though, I'm curious about why you and the team think the U.S. market is so vulnerable to this. Because many people would argue the U.S. market is very diversified.
Sure.
Because these are global businesses. They don't have all their eggs in one basket. Why is it so? Is that why it's so vulnerable?
That's the biggest reason why it's so vulnerable, is because U.S. multinationals have been at the forefront of driving globalization for the last 30 years, which has helped enable a tremendous margin expansion, which is the justification for U.S. valuations being enormously high. So you work through all of that and you say, oh my gosh, well, how much global trade was responsible for the manifestation of elevated valuations is a key metric to follow. If global trade is reversing, if we're going into a deglobalized world where we no longer can take advantage of vertical supply chain specialization globally, that means U.S. multinationals are tremendously vulnerable. The other reason, and this is really just about this cycle specifically, is beta. When you move into a market corrective process, beta matters very, very much, by country, by stock, by sector. The vulnerability of the U.S. is among the highest in the world right now because it was one of the highest market betas in the world coming into 2025. You had two markets where betas were way north of 1, and that was the Netherlands and the U.S. On the flip side of that, you've got other markets that are much less sensitive to the overall trade, like Saudi Arabia, where the market beta is less than 0.5. And as of Friday, Saudi Arabia was still flat from the beginning of the year. So there are two big reasons why the U.S. is so vulnerable. One of them is just it's our place in trade. The other is just the dynamics of the market itself and market beta.
Your team put out a note, though, today, in terms of creating a portfolio that can maybe withstand this. 30-something percent, 34%
it's quite shocking.
of U.S. in a global portfolio.
Right.
If you go based on benchmark indices, we're at like 65% right now. That's a huge cut to allocations to the U.S.
And this is, I think, we've done a lot of work over the last 3 years about the inefficiencies of global benchmarks in terms of market cap weighting. It's just the wrong construct for thinking about how to invest in global stocks, mostly because the contribution of risk to the portfolio is so critically important to ultimately driving sharp ratios in equity market returns. And we get to a point where the risk contribution of the U.S. by the end of 2024 was gigantic. So our portfolio model was constantly leaning against the U.S. risk contribution. And the way that we define risk contribution is through volatility and correlation. Yeah. So this kind of feeds back to that beta conversation that we had in a not so roundabout form.
Is risk more concentrated now than maybe what we saw in the lead up to the GFC issues, even going back? Okay, you've answered all my questions.
By very far. Our model is saying at this point in time, the U.S. is contributing so much risk to the global portfolio that you want to hold as much in the U.S. as you hold in developed markets, ex-U.S., and as much in emerging markets as well. So it's actually neutralizing exposure by market cap, which says a lot about just how much the U.S. trade became overinflated as well as extremely risky over the last 3 years.
Hey, Gina, just 30 seconds on valuations. For investors who are tempted to buy the dip right now, how low do valuations have to go for S&P 500 companies for you to be satisfied to say, okay, this is in line with historical averages? Yeah,
there's no magic number. I will say that, Tim. As everybody asks me, what's the magic number? Is it 15? Is it 15? The 15 is the whisper number, always. Okay. The market tends to bottom at or around 15 lately, though in the great financial crisis, obviously, we got well below 10. Ultimately, it's not perfect. And in 2022, we didn't quite get all the way down to 15 on that 25% correction in stocks. So many people have anchored on 15. What I want to do is get to the point where our fair value model says we are adequately pricing a realistic earnings outlook, considering the moving parts. We're still working on where that magic number is, so stay tuned because we'll have it for you tomorrow.
Gina Martin Adams.
I'm going to call you first thing in the morning tomorrow.
You can subscribe to her emails too, by the way.
I do.
Okay, good. Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist, joining us here in the studio. Gina, thanks so much. Okay, so that's the view when it comes to asset allocation, the view certainly on part of the macro. And let's get to the more macro and like the way rates are going to move. And also the view on the economy. For that, we bring in Stuart Paul, Bloomberg Economics U.S. economist. He joins us here in the Bloomberg Business Week studio. Stuart, I want to start with where you think we are, because something that's getting a lot of attention on the Bloomberg terminal right now is comments that Larry Fink of BlackRock made a little earlier. He said that most CEOs he talks to think the U.S. is in a recession. Do you think the U.S. is in a recession?
I think that's wrong. I think that's misguided. We're definitely going to go through a period of slower growth. The first and second quarters, I think in particular, really the first quarter when we were pulling forward a lot of the imports that will be subject to tariffs. We're also going to see accumulating inventories that should help to moderate the effect of pulling forward those imports. As we deal with uncertainty, yes, there should be a less fixed investment. And consumers should start delaying their buying plans. They had pulled forward their buying plans. They should start cooling off their demand, especially for imported goods. But I think that it's a little bit too provocative to say that we have already entered a recession. We will hear it first from earnings, and so all eyes on Gina. But strictly from the macro data, I think that he's missing the ball here.
And I mean, of course, we really have to wait for, that sort of mythical group down in Washington to actually declare a recession. I'm going to actually throw cold water on that. Why does it matter if it's a recession or not? Because everyone is basically already modeling in a slower pace of growth. They're also modeling in a higher rate of inflation. That kind of leaves us in a bind. Whether it's a recession or not, what economic activity, if at all, can we actually count on in that environment?
So I think that we have to think about a few different things, right? If we're counting on a mythical group in Washington to come and save the day, that group would probably be the Fed. And if they're looking at anything in particular, it's core inflation. And yes, you're right. We are going to get some more inflation. We are going to get less growth given the tariffs that we've seen. The increase in the average effective tariff rate based on what Trump rolled out so far in his administration should cumulatively add about 2 percentage points to core inflation and should shave about 3 percentage points off of growth. The big question is if those tariffs end up remaining in place. Okay. Beyond that, the Fed is going to be thinking about the totality of policy that's coming out of the West Wing. That's going to include taxes. That's going to include immigration. So there's a lot to keep. There's a lot that they have to focus on that's going to be in play in driving macro generally. And the two things that matter, one is inflation. Yes, we're going to get higher inflation. The other is the labor market, which right now with 4.2% unemployment is not going to get the Fed to wound up. 4.2% unemployment is going to allow the Fed to stay focused on inflation.
I mean, we had this column earlier today by Bill Dudley, who talked in his view, he sees us spiking to 5% on headline inflation within 6 months. If growth is slowing, I mean, why am I supposed to believe that the Fed will even be in a position to cut rates, let alone the 5 times that were being priced in earlier tonight?
No, I think that's right. I think that the Fed is not going to be rushing to cut rates. I think that with inflation elevated and unemployment staying around 4.2%, there's certainly no rush to cut rates. I think that the pricing was wrong.
Stuart, we hear over and over again from supporters of the president, whether they're in an official capacity or not an official capacity, that the equity market is really held, the majority of shares are held by the wealthiest people in the US and the wealthiest people in the world. We hear also that the stock market is not the economy. What is the connection, though, to Main Street, the connection to the real economy, when you see a decline of 20% in the S&P 500?
When you see a move in valuations and you see a move in capital markets just generally, you're talking about firms' ability to access financing. That's the first thing. When you see spreads start to widening, so now we're moving outside of equities, but when you see spreads start to widen, you need to start getting concerned about firms' access to capital. Now spreads haven't been completely blown out, but again, they're moving in the wrong direction if you're looking to promote investment in the United States. Then, of course, we just have the wealth effect. And given the fact that the upper portion of the income distribution accounts for the bulk of consumer spending, it's about a 2 to 4% wealth effect. So each dollar in wealth that's lost will account for about 2 to 4 cents in reduced spending. When you're erasing a few $1 trillion of wealth, it's going to start showing up in spending.
There's this theory that has been making the rounds that the president is trying to lower the yield on the 10-year.
Sure.
And essentially make it so borrowing costs go down, people can get mortgages for less money. Yet right now the yield on the 10 years at 4.15 and the stock market has fallen about 18%, 17% from its highs just in the last month. Why aren't we seeing the 10-year react more?
So I'll leave it to Ira, Jersey, Bloomberg Intelligence, U.S. rate strategists to speak specifically to the bond market. But if we think about whether or not it makes sense to try to push mortgage rates or long-term rates down to try to promote any sort of consumer spending or residential fixed investment in the U.S., it's just not there. The average rate that's being paid for a 30-year fixed rate mortgage for the existing homeowner is just a touch over 4%. It's not even close. We're not even seeing mortgage rates that are close to encouraging people to part with their homes and allow new people to bid up the price of homes more aggressively. Based on our modeling, even if you have a 10-year around where it is now, just above 4%, we'll still only see home price growth in the low single-digit range, around 2.5% for the year.
Yeah, I mean, one thing that I always keep in mind when I hear that is that home purchase is a huge purchase that people only make a couple times in their lives. And then so many Americans already have locked into rates that are lower than the rates that we're already seeing now. Stuart, always good to check in with you. Thanks so much for joining us. That's Stuart Paul, Bloomberg Economics U.S. economist, joining us here in the Bloomberg Business Week studio. Taking a look at markets right now, the S&P 500 is higher by just 0.5 percentage point. The NASDAQ Composite, though, is in the green, up 0.8%. Wild swings today. The Dow down 0.4%. Coming up next, Dan Ives is here. We're talking Tesla and Apple and those stocks under pressure. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow Jones Industrial Average holding lower, down by about 0.3% right now. The Dow down 78 points, but NASDAQ in the green, up 38 points now, higher by about 0.7%. Your S&P 500 index at 5107. NASDAQ now up 170. That is a gain of 1.1%. But the Russell 2000 index of small cap shares does remain lower, down 0.2%. The 10-year 4.16%, with a 2-year 3.75%. Spot gold now down $68 the ounce, $29.72, down 2.1%. While West Texas Intermediate crude oil down 1.1%. WTI 61.33 a barrel. At one point today, we did have the U.S. benchmark falling below $60 a barrel. Oil stocks are declining. ExxonMobil down 0.8%. ADRs of BP down 2.7%. Chevron right now lower by 1.3%. Bottom line here, volatility, the key theme today. We did see a 7% intraday move from low to high for the S&P 500 index. Again, the S&P right now up 0.8%, higher by 40 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. A couple of stocks making big moves today. Shares of Apple fell as much as 7.3% earlier in the session. The stock on track for its biggest 3-day sell-off in decades amid ongoing uncertainty about the Trump administration's tariff policies. Look, a lot can happen in the next 90 minutes, but that's how things were earlier today. Tesla shares fell as much as 10.5%, extending losses, dropping below a price at which Howard Lutnick, the Commerce Secretary, predicted they'd never fall to again. Dan Ives is watching these moves closely. He's global head of technology at Wedbush Securities. Yesterday, he cut his price targets on both of these stocks. He joins us here in the Bloomberg Business Week studio. Dan, I want to start with Tesla because you are a longtime bull. I never thought I would see the day where you became bearish on the stock, but this weekend you lowered your price target from $550 to $315. There are haircuts and there are haircuts. This is a big haircut. Why'd you do it?
I mean, there's two reasons. One, the political damage that Musk has self-inflicted between Doge and obviously everything we're seeing play out, along with the Trump administration, I believe it's destructed demand 20% in Europe, 10% in the U.S., and that could be conservative. And I think that's something that's also starting to show up in China, which is ultimately, look, if you look at our new estimates, it's really taking a huge haircut to what China growth is going to look like. The second thing is when you look at the tariff's a headwind. There's no way to sugarcoat it. And the reality that a U.S. car company makes cars in the U.S. with all U.S. parts, that's a fairy tale. That's a Pinocchio story. And I think for Tesla and for Musk, it's a moment of truth. Because you can't be 3% CEO, 97% Doge. And the brand issues, it's created Tesla into a political symbol. And that is a very, very bad thing. And I think it speaks to what's happened in the stock.
Do you see any hope that image could be turned around? And I ask that not so much in terms of what Musk can do, but maybe the question that investors are going to start having to ask is whether the company just needs new leadership altogether.
Look, I mean, in the next 4 to 6 weeks, he makes a choice. You step out of Doge, you literally now back to CEO of Tesla. You could still be some sort of, official, unofficial advisor, whatever it may be. But the reality is then the brand damage would be contained. It would be stitches, a black eye.
Will it though? Because it's on him. I mean, it's not just people saying, oh, we think Tesla's a bad car. They're looking at the CEO and they're saying, we think you're, from not my words, you're a fascist, you're a Nazi. This is a taint that you just don't scrub off overnight.
And I don't think you scrub it all. There's no way that you scrub it all. Like I said, there's a permanent brand damage that's here. But here's the key. You continue down this road, then that permanent brand damage, it becomes something much bigger.
Yeah.
And the shame is that, and it's, look, the reason we kept the rating and didn't downgrade is because I believe, along with NVIDIA, two of the best disruptive technology companies in the world. But here's the thing, this is to fork in the road. Like
to borrow a phrase from him.
For Musk, now to make the right decision.
Maybe email him with that as the subject line and see if he replies. Hey, I do want to get to some breaking news. Apple plans to source more iPhones from India over tariffs. We're going to talk about that in just a minute. The Wall Street Journal is reporting that. I want to go back to Tesla, though, and talk about China a little bit. Xiaomi, BYD, the technology that those car companies have, among other car companies in China. You've spent a lot of time traveling around the world looking at this technology. Do Americans actually understand how innovative Chinese homegrown EVs are?
No. And actually, it almost speaks broader to even some of the issues that we talk about in terms of like tariffs, the concept that we can make things here in the U.S. Look, China, when you look on the EV side, I mean, China's really front and center.
Because that seems like a huge headwind for Tesla.
Well, especially when it comes to BYD in terms of, because think about it, right now, BYD, they're going after Europe, South America, aggressively going after the rest of the world. At a time where Tesla, this should be the time that it's go time, that you're going after the rest of the world. But the political damage, the brand damage that Musk has done, self-created, it's hurt that issue. So my whole point is that the longer term for Tesla, it's one of those moments where its future will be determined, a lot of it, how Musk handles the next 30, 60, 90 days.
But this is still a company that gets pretty much half of its revenue from outside of the United States. A big chunk of that was in China, at least based on the numbers at the end of last year. So if China goes, or at least it starts to wither to a much smaller percentage of sales, can he make up those sales anywhere else around the world? No.
No, I mean, that's why, it's the hearts and lungs. There's no, and also when you look at what's happened in China, and we've talked about over the weekend, all the issues with tariffs and everything, China, what does it do? Drives buy more domestic, BYD over Tesla, Huawei over Apple. It speaks to the broader issue that a lot what's happened here is that the companies that take a most on the chin will be Tesla and Apple.
But with Tesla, just one last question on Tesla, though, what's the alternative? If I'm shopping for an electric vehicle, and this was the advantage Tesla had for years, really, was there really wasn't an alternative, and not a viable alternative. Now, I know there are a lot more vehicles out there, EV vehicles out there, but not necessarily at the scale of production that Tesla has.
No one could really even
or the pricing that Tesla has.
And look, in that, but it speaks to what's so frustrating about what's going on. If this was Intel, look, these are disasters relative to like, okay, is it the stock, is it cheap or falling knife? Tesla, it's about the massive opportunity ahead. But what Musk is doing in terms of, it's a self-inflicted wound that needs stitches, now surgery, and that's our whole point. It's like, you got to make the decision.
Let's get to Apple. Shares of Apple right now are lower by about 4.2%. You cut your price target on the stock to $250 from $325. I want to start with the headline that we're getting from the Wall Street Journal. The company plans to source more iPhones from India as a potential fix for tariffs. A big part of your note has to do with exposure to China. Maybe in the first Trump administration, this would be news that investors would cheer because, okay, well, India hadn't been hit with tariffs. It was between the U.S. and China during the first Trump administration. With global tariffs, does anything matter?
But that's the whole, I mean, think about Vietnam. You move to Vietnam, Vietnam's worse than China. And then like when you talk about India, it would take years to even make that more than 5%, just given the logistics and the nature of India, in terms of as Apple tries to move some stuff there. Look, no company in the world is hurt more from once that came out of Trump's mouth in terms of Taiwan and China tariffs than Apple.
Yeah.
Because you're talking about 90% of iPhones are made in China. And the reality, and even over the weekend, well, we got to make it in the U.S. Here's the deal. If you want $3,500 iPhones, we should make them in New Jersey, maybe make them in California. If you like $1,000 iPhones, you make them in China. Well, and that's just the reality.
Well, it raises the question, too, is whether Apple really would try to move. I mean, do they have enough pricing power where if they have to raise the cost of an iPhone by 20, 30%, I mean, I don't know. They've convinced people somehow to pay $1,000 or more for it already.
But that'd be massive demand destruction. And look, and my whole point is that it would take tens of billions of dollars to even move 10% of the supply chain. That would take 3 years. So that's why the reality right now, what's going on in terms of tariffs and the reaction, investors look at it like it's untenable, and it would be an economic Armageddon to U.S. tech industry. In my opinion, it would set U.S. tech industry back a decade.
Do you think the White House understands the economic Armageddon?
Look, I think it's easy to stand in front of a microphone, and I get it. Politicians talk. The reality is when you spend time walking through fabs in Taiwan, Foxconn in terms of China, you spend time there and then you come here and you actually think, given our labor force, manufacturing costs of labor, that we're going to make that here. That is just, in my opinion, it's massively unrealistic. And that's why it just speaks to what's happening with stocks. Because investors, they're not, this has nothing to do with Republican, Democrat.
Yeah.
Investors know math and the reality.
Yeah. And I'm kind of playing devil's advocate here, but with regards to Apple and its ability to find some transition through all of this, is there a way that they could maybe increase sales outside of the U.S.? And I bring that up because Tim Cook was just over there in China for that big meeting. He obviously toured a lot of other facilities and universities. For some reason or another, he seems to have a relatively decent relationship with the Chinese government.
10% politician, 90% CEO.
Yeah, and he's done it right. He navigated the first Trump administration, and I do wonder if maybe we're counting him out, that he might find a way to navigate through this.
Look, the $500 billion they announced, is that getting some sort of exemption here and there? Look, and that's something that like investors are holding out for. But the reality is, if you want a body blow and an uppercut and cut the knees off of the, in my opinion, probably the best technology stalwart in the world in terms of Apple, this does it.
Wow. Forgive me, Dan, I want to go back to Tesla because I'm getting a question from a viewer right now who says that Elon's brand damage has been evident for months. Why did you just downgrade the stock as a result of this?
No, it's a great question because I believe from everything we're seeing in Europe and the US and deliveries going into 2Q, that it went from something that was containable, 5%, to something much broader. And I believe it was also our view that he'd hold the line, start to step back. Instead, he hasn't. So the point is that brand damage, when we model that out into 3Q and 4Q, that's us basically modeling out what we believe the brand damage is going to do to the next few quarters. And look, and I would also say like it's something where it's become a life of its own, and Tesla's become a political symbol, and it's a very unfortunate situation, but look, it's self-inflicted by Musk.
We're heading into earnings season. At some point, they're going to have to address investors directly. I think Tesla reports in mid-April and then Apple not to May 1st. What do you think the CEOs and the CFOs, for that matter, can actually tell investors to sort of calm them down?
No company's going to give guidance, in my opinion, during earnings season. I'd be shocked if any company gives guidance. If you want to play blindfolded darts, look, and I think the reality is, blindfolded darts actually is pretty fun, but beside the point, it's, look, I think they're basically going to have to give some sort of guardrails, how they're going about it, how are they scenario planning, and that, because investors want to understand, worst case, base case, best case.
Dan Ives, Global Head of Technology at Wedbush Securities. Thanks so much for coming in.
It's great to be here.
Good to see you. The S&P 500 higher right now, just fractionally up 0.1%. The Dow down 0.7%. The NASDAQ higher by 0.4%. Coming up next, when he speaks, Wall Street listens. Jamie Dimon's investor letter, his annual shareholder letter. That's next on Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, but the S&P, NASDAQ, they are both holding on to gains on a volatile Monday. Let's call it a manic Monday with the S&P right now back in the green, higher by 14, up by about 0.2% at 5,086. The Dow, though, down 229, drop there of 0.6%. NASDAQ up 100, even now up by about 0.6%. And that S&P quote that I gave you does not tell the entire story. We did see a 7% intraday swing. Again, the S&P up now by 0.2% with the 10-year, 4.14%, the 2-year, 3.72%. Spot gold now down 2.1%, $29.75 the ounce. West Texas Intermediate crude down 1.3%, $61.18 a barrel. President Trump has ordered a review of the potential sale of U.S. Steel to Nippon Steel, opening the door to amend a decision by his predecessor Joe Biden to block the transaction. U.S. Steel shares, they are surging now by 14.6%. Nippon Steel ADRs, they're up by 0.4%. Recapping a volatile session here with the S&P holding on to a 22-point gain at 5,096, up by about 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for the update, Charlie. Do appreciate it. I'm Tim Stenbeck. That's Romaine Bostic in for Carol Masser. When he speaks, Wall Street listens. I'm not talking about Romaine, but that's true. I'm talking about Jamie Dimon, JP Morgan Chase Chair and CEO. He's out with his annual shareholder letter. In it, he urged a quick resolution to the uncertainty sparked by President Trump's tariffs. He also warned against a potentially disastrous fragmentation of America's long-term economic alliances. We've got with us Sally Bakewell. She's Bloomberg News U.S. finance team leader. Sally, 58 pages this year. And to be fair, there are a lot of charts and graphs, but there are also a lot of words in there. You were up almost all night reading the letter, writing about it. He covered a lot of ground. I noticed the word tariff appeared 13 times in there. That's where I want to start.
Yeah.
He's not a fan.
Well, what he wrote actually added up to a very interesting critique of what's happening under the current administration. He gave some pretty serious warnings, and while he didn't directly come out and criticize Trump, he said that if the tariff issues aren't resolved and this uncertainty continues, the negative effects will get worse and become harder to reverse. And he talked about the potential for retaliatory actions by other countries, the effect on confidence, the effect on the dollar, the impact on investments and capital flows. And he said, he sees this as one large additional straw on the camel's back, and could it be the one that breaks it? We don't know. But he did actually say, and this was sort of the more nuanced part, that there were legitimate reasons for tariffs. He said trade has caused America a lot of harm. It's damaged jobs. It's lowered wages. And he said America has failed to protect the U.S.'s national security by becoming too reliant on potential adversaries for products and military spending. So he did have some sort of balance, and said there are some legitimate reasons for having tariffs, but we've just gone too far.
But this goes way beyond tariffs. We're talking about just a major sort of economic order that is clearly being upended. Now, we can have a debate as to whether it needed to be upended, but I thought the quote that stood out with me was this idea that America first is fine as long as it doesn't become America alone. And it does appear, at least on the surface right now, that might be where we're headed, because there doesn't seem to be any real attempt to try to keep our economic allies and even our economic adversaries in the fold. It's basically just like, we're going to do our thing as America. You can either jump on board with us or not, but we're fine without you.
Yes, he made some really big and interesting points on this. This was potentially the sort of biggest focus of his letter in a way, about America's alliances, America's place in the world. And his big point was America is weaker on its own. It needs to fortify, not to destroy its ties to maintain its place as a global leader. And I think the tariffs definitely feeds into that. And he made this point numerous times, that it's in the best interest of America's adversaries to see it weaker and for ties to fragment. And doing that plays directly into the country's adversaries' hands. And yes, he said that quote, America first is fine, but America alone is absolutely not fine.
Yeah, I was pretty struck when he wrote, "We do not need another Pearl Harbor or 9/11 to shatter any false sense of security based on the hopeful notion that dictators, terrorists, and oppressive nations won't use their economic and military powers to advance their aims." He specifically, even at the top of the letter, talks about Israel and Ukraine and how he sees America, I believe it was a term, the quote, moral power of the U.S. What do you think he meant by that?
I mean, I think he likes to say that he's, a patriot. He loves America. He spent a lot of the letter actually criticizing domestic policies and some of the issues in the country. But he does believe that America has this unique position as a global leader, and it has this moral authority, and that it needs to maintain that. And it can only maintain that by keeping these relationships with the Western world very, very strong. And, he said that Europe needs to make economic reforms, labor and tax reforms in order to grow and keep pace and not fragment itself. He called out the relationship, the global relationships with China as a potential threat. A nuclear arms race is a potential threat. And he went through history, which he often does, and talked about, how history is blotted and checkered with these examples of oppressive countries or autocratic regimes, using their, with aims that definitely sort of are to the disadvantage of America.
Did he talk at all about, though, how this is going to directly affect his business? I mean, these are very broad themes here, but we're talking about a bank, and I know they get most of their revenue technically from the U.S., and I kind of put that in quotation marks because we know the world of finance is so interconnected. So whether you're doing a deal in the U.S. that you log as U.S. income, U.S. revenue, there could have been a foreign player involved in that as well. Is he concerned? Did he express any concern about the potential hit on his business, or any concern about the economic impact on his business? I mean, who knows where interest rates might go?
That's a really interesting question, because he's always said that the biggest risk to his business is the geopolitical risk. And I think it's for exactly those reasons. And he actually didn't, I think, go into too much detail about how this world order, should it be upended, and the sort of very complicated new dynamics we have in the world, how that will actually impact JP Morgan's business. And actually it's a question we are now trying to assess as we cover the banks, like how these tariff policies are actually going to impact banks. They're not affected like automakers.
And they have to address it at the end of the week. I mean, they're scheduled to report earnings, right, on Friday, if I'm right? Yeah.
But one of the points that Romaine made, was it Friday, about banks and capital markets, is that the capital markets business of banks is affected if companies do pull back from IPOs. So you see Klarna, you see Chime, you just add like half a dozen companies that just in the last few days have said, we're holding off on our IPO. That affects these banks' businesses.
Absolutely, and a few executives have already been telegraphing that this long-awaited M&A boom is absolutely sort of off the table. Things are paused, and we are definitely expecting to see that in their earnings when they start reporting on Friday.
So Friday is when we'll hear from them on earnings. In the meantime, the commentary that we got in the letter on the economy. He said things were pretty good, at least until recently.
Yes, that's exactly right. He said that when he begun writing the letter, which we believe might have been, 3 months or so ago, things had just started to weaken. He's said frequently that the consumer is in robust shape, the economy is healthy, but he said, recently they've started to see some weakening, and that was before the actual tariff announcement. And he reiterated his concerns about inflation being a lot more persistent than people think, kept elevated by things like the ongoing wars, the need to invest in infrastructure, the deficit. And he mentioned again that, of course, the trajectory of rates he didn't really give a direction what he expects rates to do, but that it will all depend on inflation.
Any sense of any potential systemic risk? And I don't ask that from his own letter, but more for your coverage, leading our coverage here of the big banks, because this has now become a topic of conversation. There are a lot of smaller players out there struggling, and we've seen this playbook before.
Yeah, and if you just look at the regional banks' share prices today, they've been absolutely clobbered. Probably because, and that's probably a bit of a recessionary bet, as it were, that they are likely to really face the impact if there is a recession or if there is a downturn. And Jamie Dimon didn't say that he expects a recession. He said that's an open question. But the regional banks will probably, that will affect people's ability to borrow. And so regional banks may well suffer. So, yeah, I think, as per Jamie Dimon, the economic health is a huge question.
All right, we'll get more details on Friday when the company does report earnings. Sally Bakewell, Bloomberg News U.S. Finance Team Leader. The S&P 500 up by 0.1%. The NASDAQ Composite higher by 0.5 percentage point. Coming up next, the stocks on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. Carol Masser is out today. Romaine Bostick had to run because he's got TV in just a couple of minutes. We got Emily Griffeo from the Bloomberg News Cross Asset team here in the Bloomberg Business Week studio. She's got stocks that she's had her eye on. She's going to be with me on radio for the next couple of hours. But Emily, before we get to the stocks that you have your eye on, give me your take on today's market, because as Romaine and I were talking about the volatility that we saw today with the selling in the morning, then a little bit of buying on this rumor, then the selling that we saw later is looking like this is going to be one of the most volatile days in decades.
Absolutely. When I was at my desk maybe 5-10 minutes ago, the S&P 500 was in the green, and now I've come over here, I logged off on my terminal, now I'm back, and we're back in the red. It has really, honestly, Tim, what if we end the day completely flat just because of how much markets have moved? Another thing that has been very interesting to watch is that even though the equity market has been up and down, the bond market has pretty much been fairly consistent in that rates across the curve have been moving up higher. So even when the equity market move reversed earlier today, rates have just been moving in one direction.
Yeah, it's not what the Trump team wants to see when it comes to rates. The index, on an index level, though, this down 0.3% or 0.4% on the S&P 500, it really hides the volatility that we saw today.
Yeah.
Fell as much as 4.71% earlier in the session, Emily, and then went as high as 3.4%.
Within a matter of what, like 10 minutes?
Yeah.
It was really wild to watch. And again, really, I guess, emblematic of what we may be in for.
Well, I think it also shows the optimism that people would have if there were some sort of reprieve when it came to tariffs. The White House, though, calling that report fake news.
It was like a test run of what would have happened if we actually did see those tariffs removed. But I think the reversal shows that people aren't ready to just go all in and buy the dip, honestly.
Well, let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Griffeo. Emily, on the surface, the index right now looks like things are chill. Not at all the case, as we just talked about with volatility. The stock's making big moves. You had no shortage to choose from.
Yeah.
Where do you want to start?
Well, we can go non-US because Stellantis ADRs are on the move right now. But again, we almost have to refresh it minute by minute to see where we are right now. So we're down 6% in Stellantis. But the headline caught my eye. The Jeep owner is willing to help its suppliers pay tariff costs to withstand the initial shock of President Donald Trump's trade war. Investors seemingly noticing that that's going to squeeze margins for Stellantis. I guess that's why the stock is down so much. And it was also interesting because this is a day where the U.S. is down. People have been talking about European stocks coming back, and we're just not seeing that. Europe ended in the red, and ADRs also are down.
Yeah, I think a lot of well, we had Gina Martin Adams on earlier, and she was talking about decreasing U.S. exposure and buying outside of the U.S. as a result of the vulnerability of U.S. companies. And one of the reasons they are so vulnerable is because these are such globalized companies. And what she's seeing is a reversal in the decades-long move to globalization. And she sees that at least sticking for now. Okay, so Stellantis on your radar. Here in the U.S., Dollar Tree also moving.
This stock is up about 6%.
This is like one of the best performers in the S&P 500 today.
I know, and for, a company and a macro environment where consumers are going to get crushed, we could potentially see a recession coming. I guess it makes sense, Tim, that a company like Dollar Tree would be higher, people finding safety. They got a buy rating from Citi. They had rated that stock neutral. We have an upgrade. Citi analysts said that they anticipate the higher across-the-board tariffs will be positive for the discount retailer, and that if they see prices moving from $1.25 to $1.50 or $1.75, now I thought everything cost $1 here.
I was just going to say, it's not called 175.
I know, but those seem inevitable, and that consumers will be accepting of the magnitude of change.
So they have the pricing power because these products are at a level where consumers won't see as much of an increase.
Yeah.
Because $1.50 to $1.75 on a percentage basis, yes, is significant, but not on a nominal basis.
Right. You look at that and it's still,
$1.75.
it's still $1.75.
I did see this analyst note, and he acknowledged that about 50% of the company's products are still subject to higher tariffs. So they are going to certainly get hit if those end up happening. Okay, finally, AppLovin.
Okay.
We're going on this was a best performer last year.
Yeah, so this stock is up about 5%. We did have reports from CNBC that they are going to merge AppLovin's proposal to merge itself with the U.S. subsidiary and eventually the global business of TikTok. Bloomberg Intelligence said that this would help the advertising tech firm accelerate its reach beyond the typical video game clientele and into e-commerce, because obviously everyone is buying products through TikTok. BI also said, though, its bid could be crowded out by other potential bidders such as Amazon, Blackstone, and Oracle. But nevertheless, it was a piece of news that in all of this market mayhem did prove to push up that stock, at least for today.
Okay, Emily Griffeo of our Bloomberg News team. For more conversations like this, check out our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. If you're sticking with us on radio, Emily Griffeo is staying with us too. The Close is up next on TV. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, channels.
Oh, that's new.
It is Bloomberg Originals. Emily Griffeo likes our new intro.
When did you guys get that?
What do you think? Last week.
A week
Did we get
ago,
it last
I would
week?
say. Yeah.
Yeah.
2 weeks ago.
We got it 2 weeks ago. With weeks like this, I don't know, time is a flat circle, so I have no idea.
I can't believe it's only Monday.
It's
And the
be a
market
long
is
week.
still open. We still
Hey,
have
I
an
think
hour
a lot
left.
of folks, I don't know if you were one of them on your team, worked all weekend writing this big take. Were you on that?
I actually wasn't on that,
Okay.
but props to them.
Yeah.
I was out of office on Friday, so I missed that.
Oh, you missed a lot.
But they did a great job. I did miss a lot, and this has been a rude awakening, trying to catch up to what has happened.
Well,
in
Eric
markets.
Wiener's in the house. He's going to tell us in just a few minutes everything that is going on with today's trade, because it is a volatile one. He's going to be joining us in a couple of minutes. The voice you just heard is Emily Griffeo. She's Bloomberg News cross-asset team, and she is here for the next 2 hours. Carol Masser is out this afternoon. We got a big program coming up. We're, of course, talking about the markets top of mind on a volatile day such as this. In addition to that, we got the big take coming up. Wall Street is just collateral damage when it comes to Trump's trade war. And then a little later in the program, we are going to hear from Senator Elizabeth Warren. She is speaking to Bloomberg TV exclusively on everything trade, tariffs, and the economy. We'll bring you that interview as soon as we do get it. In the meantime, we are still awaiting to hear from President Trump at the White House. He's with Prime Minister Benjamin Netanyahu of Israel. And at this point, they did cancel a 2:30 press conference that they were supposed to do. That was canceled a little earlier in the day. Still, though, we are expected to hear them take questions from journalists at the White House. We'll bring you those comments when we do get them. All that and more coming up over the next 2 hours right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie.
Thank you very much. You got to keep it locked into Bloomberg Radio for the latest. We got 58 minutes to go until that closing bell clangs on Wall Street. Yes, a volatile day, a word we have been using a lot today, but case in point, moments ago we had the S&P higher. Right now back in the red, 5,058 where we stand on the S&P, down 14 now, down 0.3%. The Nasdaq Composite Index swinging between gains and losses, up 6 right now, up by just under 0.1%. But the Dow now down 360, falling below 38,000. We've got the Dow down by 1%. Russell 2000 Index down 1.1%. 10-year yield at 4.14%, with the 2-year currently yielding 3.72%. Spot gold down down $68 the ounce on the precious metal. A drop today of 2.2%, $29.70, falling below $3,000 the ounce on gold. West Texas Intermediate just below 61 right now, falling by 1.6%. We did see that 7% intraday move for the S&P 500 index after that erroneous report for the president's willingness to consider a blanket tariff pause, which the White House denied. Again, bottom line here, we saw a move of 7% intraday on the S&P. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
There's an understanding, if you've been in this business long enough, that as fast as you go down, you can rally just as fast on the other side once something happens, once there's some sort of policy intervention, once there's some sort of change.
Lori Calvasina of RBC Capital Markets. Tesla stock continues to slide. We were talking about Tesla with Dan Ives of Wedbush, down now by just about 3.5%, dropping below a price which Commerce Secretary Howard Lutnick predicted they would never fall to again. Tesla right now down by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. I'm looking at the S&P 500. I got the HCPI function on the Bloomberg terminal. Fell as much as 4.7% today. Rose as much as 3.4%. As we just heard from Charlie Pellet, we're down right now by about 0.4%. Lots of volatility, to say the least. And that's exactly why we wanted to talk to Eric Weiner. He's Bloomberg News Equities Team America's team leader. He's the author of several books, including What Goes Up, An Oral History of Wall Street from the Great Depression through the Internet Bubble and the 9/11 attacks. He joins us from just outside. Well, no, you're here today.
I'm here.
Oh my gosh, he's back with us. On Friday, he was remote, and we relied a lot on you, and we're doing that again because when you wrote that book, What Goes Up, that time span included Black Monday. A lot of people over the weekend, the chatter online was a little concerned that what we're going to see on Monday is going to look a little bit like what we saw in 1987. The volatility, yes. Maybe the massive crash, no.
I would say there was, in 87, there was a palpable sense of things coming unglued. And then on the Sunday before, well, it was the Saturday and the Sunday before, Treasury Secretary at the time, Jim Baker, came out and made a couple of remarks that really scared the market. So when you came in on Monday morning, when the traders came in on Monday morning, they were looking at it going, oh my God, you know, things are going to blow up. Here, it was less clear. I mean, I remember I was looking at futures last night. They came down a lot, but they weren't down as much as, say, China was. So there wasn't this sense that, like, the U.S. was just going to bottom out. If anything, it was going to be, like, more of a global spread. So Black Monday was kind of a more predictable route. And then it had to be lifted out by the Fed. This was something where, you know, it's kind of building.
What does that tell us then about the sell-off that we're in? If this is just gradually building, we don't have one Black Monday, does that mean?
That's exactly it. So the concern, bizarrely, the concern is that things are actually moving fairly normally, which means we haven't hit a bottom, which means we aren't seeing panic or capitulation, whatever word you really want to use. What you are seeing is people desperately wanting the president to back off of tariffs. So as soon as that rumor hit, we went up, you know, we moved, as you pointed out, you know, 8 percentage points. So wham, swing up, and then it gets taken out because that's not exactly true. But there is a very simple cure. Like Black Monday there were systemic problems. There were people who were missing. Right. Yeah. There were people who were going to have, this is what I was watching for last night, was like margin calls. Right. And situations where big hedge funds had been caught off sides, weren't going to be able to make the payments. And now you have counterparties that are wondering where the money's going to come from. That is not the case now. They're just begging President Trump to get rid of the tariffs.
In other words, like you said on Friday, this is orderly.
This is orderly. And the orderliness of it is what's scary to market pros, because it's when things get disorderly, you sort of have that catharsis. We're still waiting for the catharsis.
Right.
The difference is that this was, and it's been pointed out by many, many Wall Street people other than me, that this is caused by one thing.
Exactly. And I think, one of the criticisms I see of this on TV, our markets guests we speak to outside of the building, online, is that they're saying this is self-inflicted.
Yeah, it's like shooting yourself in the foot. Now, what Trump, the question is what the goal is with these tariffs. So if the goal is to reshore industry, that's going to take a long time.
We had Dan Ives from Wedbush sitting in that chair right there telling us an hour ago that he spent time in Taiwan. He's seen the way that these devices are made. He's seen the factories. He said, that's not happening in New Jersey.
No, and it would take forever to do. I mean, there's a reason why they moved there in the first place as well. And so if we want cheaper goods, that's part of this. There are a bunch of different things that go into the creation of our economic flow. This is like, what are we trying to do? Are we trying to change the behavior of other countries? Are we trying to change the financial system itself? What's the goal?
I also think of, if I were running a business, would I necessarily start building a factory in the US and completely pull my operations from offshore, only to then have potentially these tariffs reversed slightly, and then you already started building? Do you think that—
That's a good point.
Is that—
This is going to all be in the earnings reports, because what you do if you're a CEO right now is sort of stand pat. So growth is going to be more challenging. The idea of expansion becomes, should we or shouldn't we? I mean, you have to realize that there's a reason why manufacturing moved to Malaysia, it moved to Vietnam, and that's because China has become more expensive, because as economies grow, their employees expect more pay. So they go to the lowest producer. So the idea that we're going to bring everything back here, that's a multi-year project with dubious results and flies in the face of capitalism as we know it. If the idea is to get countries to change their behavior and negotiate with the president, then we'll see what we can do.
Mm-hmm.
So when Emily came over here 20 minutes ago, the S&P 500 was in the green. It's now down 0.8%. Why is there such a lack of conviction directionally with today's trade?
Because we don't really know what's going on. There was
conviction based on something the White House poured cold water on.
Oh, yeah.
There was a tweet.
Well, there was conviction when we came in and we were down 4% right away, or whatever it was. And then there was conviction on the upside, because what that leak was something that the traders have kind of been expecting. So that kind of played into their priors, and suddenly it just went whoosh. Everything went up. But right now, it's hard to know where we're going to go next.
What you're referring to, it is actually the most read story on the Bloomberg terminal in the last hour. I encourage everybody to go check it out. Jess Metton, Bailey Lipschultz, Esha Day. It's called "This is Madness: The 15 Minutes That Rocked Stock Market Desks."
We got to get these people on. At just after 10 a.m., shouting erupted on the Seabird trading floor in downtown Manhattan. I won't read the rest of the story, but that is the top sentence.
It's kind of wild.
We were going through it on the team as it was happening. I mean, it was happening all around us, and it was wild.
Go ahead.
Well, I'm wondering, you've obviously seen a lot of market downturns, a lot of single-day crashes. How does this one compare to history when you think about this sell-off seems to be all focused on one very specific event, whereas, I don't know, I think the financial crisis, obviously there wasn't just one headline that traders were all counting on or waiting for, but this is so specific to just one
So the
idea.
scary thing with crashes is when credit is heavily involved. When you have your traders concerned that debts aren't going to get paid off, or that, rates are just, tumbling or rising. This is not a credit meltdown. It's an equity meltdown. And it's because stock prices went way up on AI speculation. And then if growth is going to be pared back, which is what tariffs would probably do, then you have to take out some of this. So it's not as scary, I would say, as when you look at the global financial crisis in like 08, 09, there was a sense like the knife was going to keep falling, and if you grabbed it, it was going to slide right through your hands and slice your hand off. This is not that kind of thing. This is more like it actually could be stopped by one guy. Like that's different.
A weird thing happened to me this weekend, Eric, and it was when I was with a lot of friends who were about my age, we're kind of getting close to middle age, not thinking about retirement, but people who have kids, saving for college, that sort of thing. And they started talking to me about the stock market. These are normal people who don't work in the industry. I have a good friend who's trying to sell everything right now because he is scared that something fundamentally is shifting in the economic landscape. He's the second person I've talked to who's expressed concern to me that those words, this time is different. What would you say to those folks having studied other crises?
I would say that they're the contrarian indicators. That's actually what we want to hear. It's the same thing going up. When the famous story is Sidney Weinberg, who at the time was the head of Goldman Sachs, getting tips from his shoe shine guy, and he walks back into Goldman and he's like, sell everything because this is just going to be a nightmare. And so when you start seeing people who normally aren't engaged with this stuff having very strong convictions about where things are going to go, they tend to go in the other way. There really isn't a systemic problem here. That's the thing.
It's not a systemic problem, he argues, with the markets. He thinks it's a systemic problem with globalization and with the president changing the world order that he grew up with.
I just don't think that Wall Street is ready to give up the global order. And the global order is global. So it's not just Wall Street. China doesn't want to give it up. So people want the financial markets. They want the financial markets to work. And the question is how and when that will start happening. But I don't see us reordering away from capitalism because even in the trade landscape, you have other countries that are trying to band together to create trade alliances on their own without us. So this genie is out of the bottle.
Eric Weiner. Good to see you. Thanks so much for joining us. Really appreciate you taking the time today.
Happy to be here.
Let's head now to the White House. We're getting tape playback of the president meeting with Prime Minister Benjamin Netanyahu. Let's listen in.
And we'll be working a little bit after this, and then I assume you're going back home. Yes, sir. This is a quick stop, in and out. But we appreciate you being here, and we are a friend of Israel, as you know. I would say that I'm by far the best president that Israel has ever even thought of seeing. And it's an honor to be so, and to be so thought of. And many friends in Israel, they are not in an easy area. It doesn't go easy, but we are helping them. And likewise, they've been helping us very much. And so we'll see how it all works out. But we had great discussions today, I think, on the obvious subject of Iran, and also the less obvious subject with respect to Israel, and that's trade. And I think the Prime Minister is going to tell you a little bit about trade and what they're doing for the United States. So I want to thank you all for being here. Thank you very much. And
thank you.
Benjamin, thank you very much.
Thank you, Mr. President. Thank you, Don. Thank you. Mr. President, I want to first thank you for inviting me again to the White House. You've been a remarkable friend of the State of Israel. You stand by us. You're standing with us. You are a great champion of our lives. And you actually do the things that you say you do. And I think that people respect that enormously. I certainly do, and the people of Israel do. And I think the Jewish people do as well. We just saw your representative in the Department of Justice fighting anti-Semitism, standing up for Israel in international forums. I just want you to know from the heart, it's deeply, deeply appreciated. As you said, we had the opportunity to talk today about many subjects. First, if I can mention tariffs, it's a subject of some interest today. I can tell you that I said to the president a very simple thing. We will eliminate the trade deficit with the United States. We intend to do it very quickly. We think it's the right thing to do. And we're going to also eliminate trade barriers, a variety of trade barriers that have been put up unnecessarily. And I think Israel can serve as a model for many countries who ought to do the same. I recognize the position of the United States. It says, you know, we're allowing other countries to put tariffs on us, but we don't put tariffs on them. And, you know, I'm a free trade champion, and free trade has to be fair trade. And I think that's basically the position that you have put forward, Mr. President. We are going to eliminate the tariffs, and rapidly. I had the opportunity to speak to Secretary Lutnick yesterday. We talked about how we could effect this quickly, and I hope to bring a solution very quickly. We're not talking about intentions. We're not talking about, you know, just words. We're talking about results. And those results are going to come. That's the first.
Thank you very much. It's very nice.
Thank you. Thank you.
Mr. President, what about the hostages deal?
Well,
what about the hostages?
Let him finish.
Let him finish. Okay. Let me begin. We spoke about not only the hostages, but about Gaza. The hostages obviously is a human story of just unbearable agony. I speak to the families. I spoke to them yesterday. Spoke to another one when I was in Hungary before I came here. I speak to them every day. They're in agony. The hostages are in agony, and we want to get them all out. Steve Witkoff, President Trump's very able representative, helped us get a deal that got 25 out. We're working now on another deal that we hope will succeed. And we're committed to getting all the hostages out, but also eliminating the evil tyranny of Hamas in Gaza and enabling the people of Gaza to freely make a choice to go wherever they want. I mean, they should have that choice. And the president put forward a vision, a bold vision, which we discussed as well, including the countries that might be amenable and are amenable to accepting Palestinians of their free choice if they choose to go there. And I think that's the second thing that we discussed. But the hostages came right on top. We also discussed the situation in Syria. We've had neighborly relations with Turkey that have deteriorated, and we don't want to see Syria being used by anyone, including Turkey, as a base for attack in Israel. Turkey is a country that has a great relationship with the United States. The president has a relationship with the leader of Turkey. We discussed how we can avoid this conflict in a variety of ways, and I think we can't have a better interlocutor than the President of the United States for this purpose. And of course, we also discussed Iran. Look, we're both united in the goal that Iran does not ever get nuclear weapons. If it can be done diplomatically in a full way, the way it was done in Libya, I think that would be a good thing. But whatever happens, we have to make sure that Iran does not have nuclear weapons. That's the end of my speech.
Mr. President,
we're having direct talks with. Wait a minute. Wait. We're having direct talks with Iran, and they've started. It'll go on Saturday. We have a very big meeting, and we'll see what can happen. And I think everybody agrees that doing a deal would be preferable to doing the obvious. And the obvious is not something that I want to be involved with, or frankly, that Israel wants to be involved with if they can avoid it. So we're going to see if we can avoid it. But it's getting to be very dangerous territory. And hopefully those talks will be successful. And I think it would be in Iran's best interest if they are successful. We hope that's going to happen. And we had just a lot of good talks on a lot of things. I appreciate very much what you said about the tariffs. We've been ripped off and taken advantage of by many countries over the years, and can't do it anymore. Just can't do it anymore. Can't be the stupid people anymore. And it's all because of the people that sat in the seat right here. Not your seat, but this seat. They allowed things to happen to our country that they shouldn't have allowed to happen on trade and other things, many other things. I mean, look at what's happened with our last president, where he allowed millions of people to come into our country with an open border. Who would want an open border? How stupid is that? But he allowed millions and millions of people, and of the millions, and I think it was 21 million people, but let's say 3 of them were serious criminals, serious murderers and drug dealers and gang members and people from jails. All the jails emptied out right into our country, right along the open border on Mexico, generally the Mexico. Okay. They came in from Canada too, by the way, a lot. But generally speaking, on the southern border. And what a shame it is that we are now working very hard to get them out, get the criminals out, get the murderers out, the drug dealers, the mentally insane, get them out. They dropped the mentally insane in our country too. And this was all done by the Biden administration. It's a disgrace that we have to work so hard. And then we have judges that try and protect these people, but they didn't protect us when the people were being let in. But to get them out is never easy with these people. So I think we're doing a great job. The border is the best it's ever been, even as strong as it was. I had a great, solid border. I think it might even be tougher right now and stronger. So people are coming into our country, but they're coming in legally. We have a legal process, and we have that moving along properly, because we need people to come into our country, but we want people that can love our country and cherish our country. So that's where we are. And with that, any questions?
Mr. President, to the markets today, and would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many, many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. There'll be fair deals. As you know, I spoke this morning with the Prime Minister of Japan, and we had a very good conversation. They're coming. And I said, one thing, you're going to have to open up your country, because we sold no cars, like 0 cars in Japan, and they sold millions of cars into our country. They don't really take our agriculture, a little bit of it, just to keep us slightly happy, but they don't take what they're supposed to be taking. So we have a great relationship with Japan. We're going to keep it that way, but they're coming in to meet, and other countries are coming in. With China, as you know, against my statement, they put a 34% tariff on above what their ridiculous tariffs were already. And I said, if that tariff isn't removed by tomorrow at 12 o'clock, we're putting a 50% tariff on above the tariffs that we put on. So they've gone for years. They've become a rich country because of people, again, that were in the White House that allowed this to happen. Hundreds of billions of dollars a year they'd make on us on trade, and it shouldn't be that way. And I have a great relationship with President Xi. I hope it's going to stay that way. I have great respect for China, but they can't do this. We're going to have one shot at this, and no other president's going to do this, what I'm doing. And I'll tell you what, it's an honor to do it, because we have been just destroyed, what they've done to our system. You know, we have $36 trillion of debt for a reason. And the reason is that people allowed it to get that way. So we'll be talking to China. We'll be talking to a lot of different countries. And I think, you know, if we can make a really fair deal and a good deal for the United States, not a good deal for others. This is America first. It's now America first. And we didn't put America first. We put America last. The people that were in the Oval Office put America last, and we're not going to stand for it. Yeah.
Represent the U.S. in the talks with Iran.
2 questions. Do you expect any of these deals to be made before April 9th? And secondly, there have been some mixed messages from your administration. You're talking about negotiations, and yet others in your administration are saying that these tariffs are actually permanent. What is the action? Well,
they can both be true. There can be permanent tariffs, and there can also be negotiations, because there are things that we need beyond tariffs. We need open borders. You know, we almost had a deal with China where we're going to open up China. It was almost done. Some of you remember it during my first term, and it was very disappointing. We ended up making a great deal. $50 billion worth of product was sold. $50 billion. You'd like that in Israel. And I made that deal, but it wasn't the deal that I wanted. It was the deal that I wanted was that, plus they were going to open up China so that our companies could go into China and compete with other countries and China for the, you know, for a large number of people. And at the very end, that deal was terminated, and we went to a piece of the deal. And there are a lot of things outside of tariffs, but tariffs are very important. But there are a lot of things like opening up countries that were totally closed. China is essentially a closed country. In fact, it is a closed country. And what they do is they charge tariffs so that if you sell cars or if you sell anything, nobody's going to buy it because the price is out of control. But that's true with a lot of other countries also. So we're going to get fair deals and good deals with every country. And if we don't, we're going to have nothing to do with them. They're not going to be allowed to participate in the United States. Mr. President, many of time. This gentleman is all day long.
Mr. President, thank you for the chance. Many of Palestinian Americans who voted for you and not for Biden because you've promised them to end the war in Gaza.
Very honored by that vote, too.
The war is still going on and there's no hostage deal. Do you have any update on that?
Well, I'd like to see the war stop, and I think the war will stop at some point that won't be in the too distant future. Right now we have a problem with hostages. We're trying to get the hostages out. We got quite a few of them out, but it's a long process. It shouldn't be that long. We have a big problem that we've done. I think I'll ask Pete to maybe talk about it for a second, because a lot of people are asking. The Houthis, we've been very tough and very successful militarily. We've really damaged them badly. These were people shooting down ships and other things, by the way, flying objects like airplanes. And we've put a major hurt on the Houthis, which nobody's been able to do. We've really hit them hard, and they know it, and they don't know what to do. And it's every night, night after night. And we've gotten many of their leaders and their experts. They're experts on missiles. I mean, they actually make missiles. Nobody thought that. But they make missiles. They're highly sophisticated, and they're very tough. But they've been very badly damaged. Nobody else was able to do that but us. Pete, you want to discuss that, please?
Yes, sir. It's been a bad 3 weeks for the Houthis, and it's about to get worse. It's been a devastating campaign, whether it's underground facilities, weapons manufacturing, bunkers, troops in the open, air defense assets. We are not going to relent, and it's only to get more unrelenting until the Houthis declare they will stop shooting at our ships. And we've been very clear with the Iranians as well. They should not continue to provide support to the Houthis, and that message has been made very clear. So we have a lot more options and a lot more pressure to apply, and we know, because we see the reports, how devastating this campaign has been in them, and we will not relent.
We have a great military. There's no military like our military. And despite Biden having given a lot, but nevertheless a pretty small piece, but it was a lot of our military away in Afghanistan, and one of the dumbest situations, I think, and maybe the most embarrassing situation we've ever been involved in, that short period of time in Afghanistan. What a disgrace that was, but left a lot of our military behind, left. You see them in their annual parades where they're parading trucks that are armor-plated and different things that they can't. But it's many billions of dollars we left behind. But despite that, we have a tremendous military. That was a very small portion because we rebuilt the military during my first term. And we have great things happening with our military. We also essentially approved a budget, which is in the facility, you'll like to hear this, of $1 trillion, $1 trillion, and nobody's seen anything like it. We have to build our military, and we're very cost conscious, but the military is something that we have to build, and we have to be strong because you got a lot of bad forces out there now. So we're going to be approving a budget, and I'm proud to say, actually, the biggest one we've ever done for the military. We're cutting other things that were under DOGE, but under a lot of other. When you look at a woman getting $2 billion for environmental, and it had nothing to do with environmental, and they had $100 in the bank, and they give her $2 billion. Many of those cases, all that stuff is going to be cut out. But we are getting a very, very powerful military. We have things under order now, the likes of which we've never had before. We've never had the kind of aircraft, the kind of missiles, anything that we have ordered, and it's in many ways too bad that we have to do it, because hopefully we're not going to have to use it. But the military is very, very powerful, and it's going to remain that way.
How do you, Mr. President, deal, please.
Yes, please.
Thank you, Mr. President. I want to ask you about Iran, because this is the first time we hear that the U.S. is having a direct contact with the Iranians. Is it possible to give us some more information at what level the U.S. is represented?
High level, very high level. Yeah. We're dealing with the Iranians. We have a very big meeting on Saturday, and we're dealing with them directly. You know, a lot of people say, oh, maybe you're going through surrogates or you're not dealing directly, you're dealing through other countries. No, we're dealing with them directly, and maybe a deal is going to be made. That would be great. It'll be really great for Iran, I can tell you that. But hopefully, we're not going to have to get into that. We are meeting very importantly on Saturday at almost the highest level, and we'll see how it works out. Please.
How do you ensure, Mr. President, that these tariffs don't drive U.S. trading partners into the hands of the Chinese? That they
I'm not worried about it. I'm not worried about it. If they want to be in the hands of the U.S., they don't want to be in the hands of the Chinese. And the Chinese have turned out to be really not very good at that. People that are with us, they're with us. But we cannot be taken advantage of any longer. I used to watch these deals for years. I've been talking about it for years. You know, I've been talking about it for 35 years, how our country is being ripped off. I mean, 30 years ago it was Japan, then it was something else, then it was another group, then it was China. China's doing the best job of it, frankly. And it's just not going to happen, not going to happen.
Mr.
President, you said
the EU has said that they have offered 0 for 0 tariffs on cars and industrial goods. Is that not enough?
Well, the EU, no, it's not. The EU has been very tough over the years. It was, I always say, it was formed to really do damage to the United States in trade. That's the reason it was formed. It was formed with all of the countries from Europe, I guess most of them, not all of them, but most of them. And they formed together to create a little bit of a monopoly situation, to create a unified force against the United States for trade. So they have NATO, which is largely the same countries, and they took advantage of us dollar-wise and militarily until I got there. You know, I was able to get $600 billion from NATO, where they paid NATO because most of these nations weren't even paying. We were paying for NATO. So we're paying them to guard them militarily, and they're screwing us on trade. So that's not a good combination. So now it's really turned around. It's the opposite. And the European Union's been very bad to us. They don't take our cars, like Japan in that sense. They don't take our agricultural product. They don't take anything practically. And yet they send millions of cars in a year, Mercedes-Benz, Volkswagen, BMWs. They're sending millions and millions of cars into the U.S., but we don't have a car that's been sold to the European Union or other places, but let's go for the European Union. And it's not going to be that way. It's got to be fair and reciprocal. It's got to be fair. It's not fair. We have a deficit with the European Union of $350 billion. And it's going to disappear fast. And one of the reasons and one of the ways that that can disappear easily and quickly is they're going to have to buy our energy from us because they need it. They're going to have to buy it from us. They can buy it. We can knock off $350 billion in 1 week. They have to buy and commit to buy a like amount of energy. And we have that. You know, we have more energy than any country in the world. I don't know if you know that. He knows everything, but the one thing he may not know, we have more energy than any country in the world. We have more of every kind of energy, every form of energy, from oil and gas to coal. And people talk about, I call it beautiful, clean coal. As you know, Germany is opening up a coal plant a week. They tried the windmills and it didn't work. They tried all the other solutions and they were ready to go out of business. Now they're doing a coal plant a week. China is now up to 2 coal plants. They're opening 2 major coal plants every single week in China, all over China, and then we're not allowed to use coal. Well, we have clean, beautiful coal more than anybody else. We have oil and gas more than anybody else. We have the most energy of any country in the world, including Saudi Arabia, including everybody, by a lot. And I took it to number one. We were number 3, and I took it to number 1 during my administration. And the reason that we were hurt so badly and the reason that we went into such incredible inflation during Biden is energy. It was also their bad spending, but energy, because they played around with this incredible thing that we had built, this administration had built, and the energy costs went through the roof. And when that went up, everything else followed. Now, if you look at what's happening, you got to see this today. I said we're going to try and get groceries down, right? An old-fashioned term, but a beautiful term. Eggs. So when I got in, the press went absolutely crazy the first week. They said, eggs have quadrupled in price. I said, I just got here. Tell me about it. And Brooke Rollins and our team did a great job, and eggs are down now 79%, and they're all over the place. And this was a problem that somebody else would have taken a long time to cure. We have energy is down. We have interest rates are down. We have groceries, meaning food is down. We have everything is down at levels that nobody ever thought possible. Energy looks like it's going to be in the $2.50 a gallon range, and maybe below that for a car. So for gasoline. So we're really doing amazing. I mean, we're cutting prices because prices got so high people couldn't live. I mean, the prices for groceries, the prices for standard groceries, standard things were going through the roof. They couldn't live. And now those prices are coming down. So call them groceries, but that's down, energy's down, and interest rates are down. Everything's down. And the interest rates, the beauty there is when we refinance debt, you know, debt's become such a big factor in this country. We're going to start paying debt off with tariffs and other things. But it's such a big factor because the interest rate's so high. Well, now that's coming way down. So our budget's going to look a lot better because interest costs are way down. And I guess I've done that.
Many Israelis are watching you now on live show. Good. What is your specific way of getting the hostages out from the horrific captivity?
We are trying very hard to get the hostages out. We're looking at another ceasefire. We'll see what happens. But we want to get the hostages out. The Israeli people want the hostages out more than anything. They want the hostages out. This man is working very hard with us to do that. I mean, I don't know. I hope he's being appreciated because he's been a great leader. He's working very, very hard on the hostages and many other things. And there are plenty of things you have to work on. It's a tough place in the world.
I have a good partner.
Yeah, you do have a good partner, and so do we. We're working very hard on the hostages.
If you're going to negotiate a new deal with Iran, can you elaborate how it's going to be more effective than the JCPOA?
Well, I can't really say that, but I think it'll be different and maybe a lot stronger. But they were so happy when we made that first deal because we did get a lot out. You know, I had people right in this office, this beautiful Oval Office. They came in, 10 people, hostages, you know that. And I said to them, so how was it? And the stories they told me, I mean, as an example, I said to them, was there any sign of love? You were there, 10 people. It's only 10, but it's pretty representative. Did the Hamas show any signs of, like, help or liking you? Did they wink at you? Did they give you a piece of bread extra? Did they give you a meal on the side, like, you know, you think of doing? Like what happened in Germany, what happened elsewhere. People would try and help people that were in unbelievable distress. They said no. I said all of them. I said, did they ever wink at you like, you'll be okay, you're going to be okay? No, they didn't do that. They'd slap us. The hatred is unbelievable. And the lives, you know, they lived in a pipe, not really a tunnel, it was a pipe. And they always thought they were suffocating, they were going to suffocate. And then they'd open up the pipe, and it was like 3.5 feet high. This isn't, you know, we hear tunnels bad, but pipes are worse. And the stories I heard were incredible. But I just said, was there any sign of potential love or affection? And there were none whatsoever. It was amazing to me. There was nothing like, here, take this, it's a little extra meal or something. They lived like hell. I don't know. They seemed to be, they were amazing to me because they seemed to be pretty normal. They weren't scarred, but I guarantee underneath they have to be scarred. And one was there for 356 days. Another was there for about 180 days. You know, a long time. These are people that have been really, really horribly treated. I've never seen anything like it, actually. I was very surprised to hear the answer.
Thank you, Mr. President. Are there 2 or 3 countries that are on your list that you feel are farther along in getting their tariffs lowered?
I think there are many that want to get rid of tariffs right now. European Union, I mean, as badly as they've treated us, they brought their car tariffs essentially off. I guess they brought it down to 2.5, and I hear maybe to nothing. But it's not only tariffs, it's non-monetary tariffs. It's tariffs where they put things on that make it impossible for you to sell a car. It's not a money thing. They make it so difficult, the standards and the tests. They drop a bowling ball on the top of your car from 20 feet up in the air, and if there's a little dent, they say, no, I'm sorry, your car doesn't qualify. When the same car from Germany or anything would dent likewise, unless you can have an army tank, it's going to dent. So they come up with rules and regulations that are just designed for one reason, that you can't sell your product in those countries, and we're not going to let that happen. Those are called non-monetary barriers. They make barriers that are so tough that it's impossible to qualify. So tariffs are a big part of it, but there's another big part of it, and that's barriers. They also do something else. They manipulate their currency, and they drive it down. They want to have low currencies. You know, it sounds better to have a high currency, a strong dollar or whatever, but they bring their currency down. And when it competes with our currency, it's very hard to sell a tractor. It's very hard to sell product because their currency is low and ours is much higher relatively. And so it makes it very hard. I speak to a lot of companies that do business, tractor companies, and they say it's so hard to sell because what they've done is they've lowered the yen or they've lowered the yuan or they've lowered their currency so that it's very hard to compete. We don't want that either. So we have a lot of things that we're talking about, but we're going to fix it properly, and it's going to be fair to everybody. And in the end, I think we're going to have a world that does a lot better, you know. But they have to respect the United States, and nobody but me would do this. Nobody but me would do this. You know, it would be nice to serve, a nice, easy term, but we have an opportunity to change the fabric of our country. We have an opportunity to reset the table on trade. We lose billions of dollars. We lose close to $2 trillion a year on trade. We lose $1 trillion a year to China. $1 trillion. We lose hundreds of billions of dollars a year on trade to China. We lose hundreds of billions of dollars overall, probably close to $2 trillion. Why would we do that? Number one, why would we do that? And then you have to say, is it sustainable? Then you hear about all of the people that say, well, deficits, if we have a deficit with the country, or if the country has a big surplus with us, like China has a massive surplus, that they take and they spend on their military. Well, we don't want that. I don't want them to take $500, $600 billion a year and spend it on their military. I don't want them spending money on their military. And I shouldn't have to spend money. We shouldn't have to spend it either. Because, you know, hopefully, and I said this to President Xi, hopefully it's money that we're never going to use. In other words, because we're not going to use those incredible weapons that we have and that they have. We don't want that. So it's going to be very interesting. It's the only chance our country will have to reset the table. Because no other president would be willing to do what I'm doing or to even go through it. Now, I don't mind going through it because I see a beautiful picture at the end. But we are making tremendous progress with a lot of countries, and the countries that really took advantage of us are now saying, please negotiate. You know why? Because they're getting beaten badly because of what's happening. They're getting beaten badly. They're being devalued as countries. But it's the only chance we're going to have to reset the table on trade. And when we do, we're going to come out unbelievably well. We're going to have a strong country economically again, and we're going to have those factories that are empty all over the United States. We've lost 90,000 plants and factories. Think of this, 90,000, you wouldn't think it's possible. 90,000 plants and factories since NAFTA, which was, by the way, the worst trade deal ever developed, ever had by any country anywhere, NAFTA. And I terminated NAFTA. Everybody said it would be impossible. And I terminated it through Congress. We terminated it. You had to get it through Congress. It was a trap. It was a horrible thing, and we got it done. And we went to the USMCA, which was much better. The problem is they cheat. They cheat like crazy. Canada cheats, Mexico cheats, just one of those things. But we are resetting a table, and we're going to have great trade, and we're going to have a very strong country. Our country is going to be at a level that has maybe never been, or maybe, you know, our country was the strongest, believe it or not, from 1870 to 1913. You know why? It was all tariff-based. We had no income tax. Then in 1913, some genius came up with the idea of let's charge the people of our country, not foreign countries that are ripping off our country. And the country was never that kind of wealth. We had so much wealth, we didn't know what to do with our money. We had meetings, we had committees, and these committees worked tirelessly to study one subject. We have so much money. What are we going to do with it? Who are we going to give it to? And I hope we're going to be in that position again.
Mr. President, do you plan to reduce the tariffs that your government put on Israeli goods, 17%?
On where?
On Israeli goods, the 17%. Do you plan
Well,
to
we're
reduce it?
talking about a whole new trade. Maybe not. Maybe not. Don't forget, we help Israel a lot. You know, we give Israel $4 billion a year. That's a lot. Congratulations, by the way. That's pretty good. But we give Israel billions of dollars a year. Billions. It's one of the highest of, and we give a lot of countries money. You wouldn't believe if I said we give Afghanistan a lot of money, didn't it? Because that was a Biden deal, another Biden deal. Not only did he embarrass us with that, but they give them billions of dollars, Afghanistan, right? So, but no, we take good care of our friends, and we don't take care of our enemies. We're not taking care of our enemies anymore, but we do take care of our friends.
Mr. President, for the Times of Israel, the IDF is fighting again in the Gaza Strip. I myself might be called up in a month. Do you think that's the way to pressure Hamas to get to a deal? And do you think blocking humanitarian aid is also an effective pressure?
Well, you know how I feel about the Gaza Strip. I think it's an incredible piece of important real estate, and I think it's something that we would be involved in, but you know, having a peace force like the United States there, controlling and owning the Gaza Strip would be a good thing. Because right now, all it is for years and years, all I hear about is killing and Hamas and problems. And if you take the people, the Palestinians, and move them around to different countries, and you have plenty of countries that will do that, and you really have a freedom zone. You call it the freedom zone, a free zone, a zone where people aren't going to be killed every day. That's a hell of a place. It's you know what I call it, a great location that nobody wants to live in, because they really don't. And when they have good living, real living, where Hamas and all of the problems they have, the level of death on the Gaza Strip is just incredible. And I've said it. I don't understand why Israel ever gave it up. Israel owned it. It wasn't this man, so I can say it. He wouldn't have given it up. I know him very well. There's no way. They took oceanfront property and they gave it to people for peace. How did that work out? Not good.
Is the immigration, sorry, Mr. President, is the immigration plan still on the agenda?
Which immigration?
From Gaza. From Gaza.
All it is a concept that I had that I think is good, and now people are copying it. You know, maybe you want to tell. People are talking about the Trump plan. Gee, why don't we do that? Would you like to answer that question?
I think what the president talked about is, first of all, to give people a choice. You know, Gazans were closed in. And every other place, including in arenas of battle, I mean, whether it's Ukraine or Syria or any other place, people could leave. Gaza was the only place where they locked them in. We didn't lock them in. They were locked in. And what is wrong with giving people a choice? Now, we've been talking, including over lunch, about some countries, I won't go into them right now, that are saying, you know, if Gazans want to leave, we want to take them in. And I think this is the right thing to do. if you give, it's going to take years to rebuild Gaza. In the meantime, people can have an option. The president has a vision. Countries are responding to that vision. We're working on it. I hope we'll have good news for you.
I will say people really do love that vision. It's a long-term vision, but so importantly is to have that be a safe field, because you're right smack in the middle of the Middle East. You're right along Israel. It should have never, ever been given away. It shouldn't have been given away by Israel. I don't know why they did it. I mean, I do know why, because they were promised peace, but that didn't work out too well, because it's one of the most dangerous pieces of land anywhere in the world. Gaza is one of the most dangerous places in the world. So they gave it away for a good intention, and it didn't work out that way. And a lot of people like my concept, but there are other concepts that I like too. And there are some concepts I don't like. You know what I don't like? The way it is now. Because right now it's a dangerous death trap, Gaza. Yeah.
Thank you, sir. Can you talk a little bit about your potential meeting with Vladimir Putin? Do you still plan to meet with him? Could that happen in Saudi Arabia? And maybe you could elaborate as well a little bit on not providing tariffs on Russia, sir.
So the reason we're not talking about tariffs with Russia is because we're not doing business essentially with Russia, because they're in a war. And I'm not happy about what's going on with the bombing, because they're bombing like crazy right now. They're bombing. I don't know what's happening there. That's not a good situation. So we're meeting with Russia. We're meeting with Ukraine. And we're getting sort of close. But I'm not happy with all the bombing that's going on the last week or so. Horrible. It's a horrible thing. It's a horrible thing.
Can countries negotiate to get below 10%?
In terms of tariffs?
In terms of tariffs, yes.
Look, we've been ripped off and taken advantage of for 40, 50, 60 years. And the reason we got ripped off and the way they did it was tariffs. They would charge tariffs, massive numbers of dollars. And when you look at China, when I took over, it was at $507 billion they were making. I call it making. A lot of people say, oh, it doesn't mean anything. Having a surplus means a lot, in my opinion. It's almost like a profit or loss statement. And when I took over, it was $507 billion that China was, this is originally, first term. And we were very, very tough on them because they were taking that money and they were building a military with it. Then when Biden came in, he let him get away with murder. He had no idea. I'll tell you what, that man had no idea what was happening, whether it was the border or China or anything else. He had no idea what was going on. And they went wild. China went wild. And the money they make is ridiculous, okay? It's just not going to happen. And hopefully we'll get along with China. If we do, that's great. And if we don't, that's okay too. But we can't let that continue, because that's an abuse. They abused the poor people that sat in the seat. That poor Biden, he was abused by them. They took advantage of him. And I'm surprised, they have smart people. They were radical left lunatics, but they're smart. I'm surprised they'd allow that to take, to happen. But we are going to bring great trade, and we're going to be fair to other countries. And I will say this, virtually every country wants to negotiate. If I didn't do what I did over the last couple of weeks, you wouldn't have anybody wants to negotiate. We would have gone to these countries, you want to talk? And they were, well, we don't want to talk. Now they're coming to us. They're offering things like even Bibi, and this is unrelated because it's a different kind of a relationship, but he started off our conversation today that he's cutting all of the tariffs, he's cutting everything. He's going to get down to a free base. He's going to do things that, in all fairness, other countries, if they said that, would have never even thought about doing it. Now they're offering things to us that we would have never even thought of asking them for, because they're experiencing a lot of hurt. And the hurt is that they've taken advantage of us, and we finally fought back. Tariffs will make this country very rich. We're rich anyway, but we're rich in a certain way. We have $36 trillion in debt. I want to get rid of it, and we can do it quickly with proper deals. So when countries don't allow us to sell our product, but we allow them to sell their product, when they charge us massive amounts of money for the privilege of going into their country, those days are over. Okay.
Go ahead.
Me? Sure.
Me?
Yeah.
Thank you, Mr. President. On Iran, two questions, please. First, if you can give us more details about where the meeting on Saturday is going to take place.
I can't tell you that. I can just tell you there's a major meeting going on between us and Iran, and that'll take place on Saturday, and it's at top level.
And the second question about this. A lot of people think that those talks are not going to lead anywhere because the Iranians will never give up.
I think that's a possibility too.
If diplomacy fails, is the United States, under your leadership, ready to take military action to destroy the Iranian nuclear program and remove this threat?
I think if the talks aren't successful with Iran, I think Iran is going to be in great danger. And I hate to say it, great danger, because they can't have a nuclear weapon.
So is that a yes?
You know, it's not a complicated formula. Iran cannot have a nuclear weapon. That's all there is.
So
Can't have it. Right now we have countries that
action?
have nuclear power that shouldn't have it, but I'm sure we'll be able to negotiate out of that too as part of this later on down the line. But Iran cannot have a nuclear weapon. And if the talks aren't successful, I actually think it'll be a very bad day for Iran if that's the case. Yeah.
Mr. President, on manufacturing, Mr. President.
Mr. President, was October 7th the death blow of the two-state solution, and would you consider classifying the Palestinian Authority as a terrorist organization for its continued paper-slave terror financing payments?
So October 7th was a horrible day that some people, they deny it. Now, I can't believe they deny it from the standpoint of it. They do it because they think it's good politically. But October, I've seen the tapes. I've seen things that you don't want to see. October 7th was a horrible day, and it will go down as one of the really bad days in the history of the world. It was a horrible, horrible thing that happened. And they grabbed some of these people. I'll give you an example. When I was with the 10 hostages a few weeks ago, I said, so how many are there? 59. I said, oh, so 59, so we can get 59. They sort of knew the territory pretty good. And I said, how are they doing? They said, well, only 24 are living, the rest are dead. And these are young people largely. Young people don't die. You know, young people have an amazing ability to live. They can live through horrible things, but these are young people. And when they said that, 24 are living and the rest are dead. And you know, I've had parents come up, Israeli parents largely. We have some Americans, and I guess we have one left. Alex, we have the one left. But I've had Israeli parents come up to me at events and say, my son is there. I said, well, how's he doing? Well, he's dead. But would you do me the biggest favor ever? Could you bring his body back home? They talked about a young dead boy and a young dead girl like they were living. And that could have something to do with religion. That could have something to do with, I guess, maybe.
You're listening to President Trump take questions in the Oval Office live at the White House, sitting alongside Prime Minister Benjamin Netanyahu of Israel. In the meantime, we have seen the markets close, and for a very eventful day, kind of a muted close. The S&P 500 fell just over 0.2%. The NASDAQ composite was higher by 0.1%. The Dow fell more than 0.9%. A reminder, the S&P 500 fell as much as 4.71% today, whereas it climbed as much as 3.4%. It did close out the day lower by 0.2%. Let's go back now to the White House, where we continue to hear live comments from President Trump.
You know, but that second group, those people came out, and I said, this is unbelievable. We're going back into a chapter in history that is one of the worst ever. It's really very bad. Okay?
Mr. President, thank you. You've said it could take 2 years to get American manufacturing fully up to speed in response to these tariffs. What happens in the meantime? Should Americans be prepared potentially for years?
Yeah, I'll tell you what happens. We have now $7 trillion. Think of this, $7 trillion of commitments from companies wanting to go in, from Apple to many, many companies.
But that takes time.
Many from Taiwan. What?
It takes time to
Of course
fully
it takes.
manufacture
Well, are you
products
asking me a
here.
question, or are you telling me? Yeah, it takes time. You know, you got to build a thing called a factory. You have to build your energy. You have to do a lot of things. I'm giving them energy. You know, we're going to let them build their own power plants. They'll be their own. Essentially, they're going to be in charge of the power plant because our power is not reliable enough. You have a grid that's old and susceptible to a lot of things, including bombing and weather and a lot of other things. And we're going to give them record timing in terms of approvals of electric plants. Most of them want to build electric plants. We need massive amounts of electricity if we're going to compete with China and others. And interestingly, we're way ahead right now in the AI race with China. But the way we lose that race is if we can't give them electric. But we have more plants being built. We have everything. We're doing so great. And we want to keep it that way. And tariffs will be an important part of it. But one of the other things, Lee Zeldin's doing a fantastic job, head of environmental protection. And he's doing very rapid approvals for people to get, for big companies that are going to build a plant that's going to cost billions of dollars. And we're going to get them their approvals. They have to be environmentally perfect, everything good, but they're going to be in record time, a matter of months versus a matter of many, many years. Okay?
But in the meantime,
Lisa Rozowski from Haaretz. Turkey claims it will stabilize the situation in Syria.
Turkey?
Yeah. Israel doesn't want Turkey to influence in Syria. What do you think? Do you think Turkey's influence in Syria can actually make it a better, more peaceful country, or vice versa?
Well, I have great relations with a man named Erdogan. Have you heard of him? Yeah. And I happen to like him, and he likes me, and I know the press will get very angry. He likes Erdogan, but I do, and he likes me, and we've never had a problem, and we've gone through a lot, and we've never had a problem. We've always got, as you remember, we got our minister back from Turkey. You remember that? And this was a big deal at the time, and we got him back. And I told the prime minister, I said, just, Bibi, if you have a problem with Turkey, I really think I'm going to be able to work it out. You know, I have a very, very good relationship with Turkey and with their leader, and I think we'll be able to work it out. So I hope that's not going to be a problem. I don't think it will be a problem. Now, with that being said, I believe it was Turkey, and I said that to him. I said it. I said, congratulations. You've done what nobody's been able to do in 2,000 years. You've taken over Syria with different names, but same thing. I said, you've taken it over. He's taken it over through surrogates. He goes, no, it was not me. I said, it was you, but that's okay. You don't have to say, well, sort of maybe it was me. Okay. But what he did, he's a tough guy, and he's very smart. And he did something that nobody was able to do. You know, you got to hand it to him. Any problem that you have with Turkey, I think I can solve. I mean, as long as you're reasonable. You have to be reasonable. We have to be reasonable. Thank you very much, everyone.
Well, there you have it. President Trump answering questions for quite a bit of time this afternoon alongside Prime Minister Benjamin Netanyahu of Israel. Quite a bit of news that we got from the president just now. He said no pause on tariffs, but he's open to negotiations. The president said he wasn't considering a pause on his plan to implement sweeping additional tariffs on dozens of countries, despite outreach from trading partners eager to avoid the levies while still signaling he would be open to some negotiations. Here's what he said. Quote, we're not looking at that, Trump said on Monday while meeting with Israeli Prime Minister Benjamin Netanyahu in the Oval Office. He did say that tariffs were, quote, very important to his economic agenda and would generally remain, while opening the door to, quote, a fair deal and good deals with every country. For more, let's go to the White House, where we've got Tyler Kendall standing by of Bloomberg News. Tyler, quite a long time to hear from the president and Benjamin Netanyahu. Obviously, a lot of it dominated by questions regarding tariffs. The market looking for some reprieve, but did not seem like we're going to get any of that from this president. What did we learn on the tariff front?
Yeah, hey, Tim. Well, at this point, this White House really is holding firm when it does come to the tariff negotiations. Importantly, Israeli Prime Minister Benjamin Netanyahu said that Israel was ready to lower its own tariff barriers, something that the country did ahead of April 2nd in a bid to try to front load against the tariffs, but was still slapped with that 17% levy that's still planning to go into effect on April 9th. But importantly, he said he added something else, that Israel is now committed to helping reduce the U.S.'s trade deficit with the country. We have learned that this is going to be an important prerequisite, it appears, when President Trump is striking deals to bring down the tariffs. President Trump told reporters last night that it's really trade imbalances. It's not necessarily the actual tariff levies that are imposed that need to start to be factored in to these conversations moving forward. For example, he singled out the European Union during those remarks, saying that perhaps energy could be a potential area where the EU could help to fix its the U.S.'s trade deficit with the trading bloc. We should note that the EU has previously floated that it would be open to boosting its own U.S. imports of LNG. Also, importantly, Tim, the pretty big news today, President Trump doubling down on the idea that he is set to impose an additional 50% tariff when it comes to China. That is incredibly big news. Our understanding, according to the president, is that this tariff would be stacked on top of the existing 20% levy that's already been in place on China, and then the 34% levy that the White House had announced and is set to go into effect on April 9th later this week. So not appearing to back off of that threat as China vowed its own retaliation to the U.S. President Trump saying that China needs to drop that retaliatory action by tomorrow if they want to avoid what could end up being an over 100% tariff on Chinese imports.
Yeah, tit for tat with one of the U.S.'s largest trading partners. That's not what investors want to see. Hey, before we let you go, there was other news that was made at this press conference from the Oval. It wasn't really a press conference, impromptu Q&A with the president and with Prime Minister Benjamin Netanyahu. The president, Tyler, is saying that the U.S. is holding direct talks with Iran, and the next round will take place this Saturday. That's a really big deal.
A really big deal, Tim. In fact, Iran has really rebuffed this idea multiple times that it would engage directly with the U.S. Bloomberg News reporting just this morning that Iran had signaled it was ready to Oman-mediated talks, but not directly with the United States. In fact, Iran's foreign ministry spokesperson putting out a statement saying, quote, "Our proposal for indirect negotiations is a responsible, generous, and wise offer." That was before President Trump made his remarks, so we'll have to see if we get any other readout, but that was just this morning. So this is a really big development. President Trump also putting that timeline on it, as you noted, Saturday, rebuffing these reports that Iran is not ready for direct talks, saying that they will be together at the negotiating table to talk about the future of Iran's nuclear program. He was pressed on how the U.S. is going about trying to secure a deal that would be different from the JCPOA. President Trump said that he didn't have any firm details to give, but his hope is that it would be stronger. Of course, as you know, the U.S. Withdrew from the agreement in 2018. He did, though, say at the end there, Tim, that if talks aren't successful, it would be a, quote, very bad day for Iran, and Iran would be in great danger. He appeared not to rule out military action going forward.
Tyler Kendall from Bloomberg News live at the White House. Tyler, appreciate you keeping us up to date with everything we learned from the president just now. In the meantime, as the president was speaking alongside Prime Minister Benjamin Netanyahu, we did see 4 o'clock come around, which meant the close of equity trading. Here for an update on everything happening after hours and how the markets closed, let's send things on over to Charlie.
All right, thank you very much, Tim and Emily, and here's what's going on. The Dow, the S&P, they did both close lower. What a day. Extreme volatility today. NASDAQ, though, had a gain after selling last week. We had NASDAQ today up 15 points, advancing by 0.1%, ending the session at 15,603. The NASDAQ 100 index up by 0.2%. The Russell 2000 index down 0.9%. In the end, after an awful lot of twists and turns, the S&P was down 11, ending the Monday session, a manic Monday, at 5,062, down 0.2%, while the Dow was down 349, down 0.9%. S&P today had a 7% intraday swing. 10-year at 4.19% with a 2-year 3.76%. Spot gold down $59 the ounce, down 2%, $29.78, and West Texas Intermediate crude down 1.5%. 61 $107.08 for a barrel of WTI. Bitcoin right now down 0.4%, and Bitcoin with a $78,000 handle, 78,420 right now on Bitcoin. So again, recapping, it did turn out to be a down day for the S&P, down 0.2%. NASDAQ was up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Those numbers worth repeating. The S&P 500 down 0.2%. The NASDAQ composite up 0.1%. Well, the Dow fell more than 0.9%. The market chaos unleashed by Donald Trump's trade war continued for a third day as stocks, bonds, and commodities all swung wildly, buffeted by both fears of a recession and speculation the financial damage will drive him to change course. For more on the day's trade and also the big picture, let's bring in Cheryl Smith. She's an economist and portfolio manager at Trillium. Cheryl, good to have you with us this afternoon. And I do want to say and thank you for your patience. We were supposed to speak with you many minutes ago, so we appreciate you standing by as we heard from the president.
No problem.
That's exactly where I want to start. The market pain, if you're long this market that we've seen, has been caused by concern around tariff policy. I think many people would argue this is self-inflicted. Do you think this continues, or do you think that the president will change course?
I think that this chaos that we're seeing is going to continue. For whatever reason, Trump likes to work in chaos. He appears to think that it keeps people on their back foot and that he can gain some kind of advantage from it. So the tariff policy really couldn't have been constructed more perfectly to create tariff. He puts them on, he takes them off, he puts them on, he takes them off. And then there was a false rumor today that he was going to delay them by 90 days, where we got that 7% intraday swing in the S&P 500. Really, everyone is on tenterhooks. Nobody knows what's real, and everybody is following the news to try and figure this out. So I think we're going to continue to see this chaos for quite a long time.
Cheryl, what do you make of the upward move in Treasury yields today? I guess over the longer term, they have come down. That's something that President Trump has touted, that interest rates are falling. But what does it tell you on a day like today when equities are so volatile and yet we do have yields climbing pretty steadily, 10-year up 20 basis points just on the day? Yeah.
I think that what that tells us is that the Fed has pretty well signaled that they are not riding to the rescue. They are concerned about how the effect of these tariffs is going to play out for the U.S. economy, but they do not yet have the data to understand it at this point. So we had some comments from Powell on Friday. We had other comments today where they're saying, no, actually, he doesn't get to do this on tariffs and then have the Fed come and ride to the rescue and cut rates a lot more. And even if the Fed did start doing emergency cuts for rates, I actually think that would be an even worse signal. So I think we saw a bit of bond euphoria, if you will, or, you know, heading for the hills, just as a way of getting out of equities on Thursday and Friday. Treasuries were the easiest thing to buy. Probably some repositioning today.
I'm going to call you Dr. Smith because you have a PhD. You're an economist by training.
True.
Are you concerned?
Guilty as charged.
But it's good to have you talking to us about this because you have training in this. And I want to know if you think, from an economic policy perspective, what the economic consequences of this tariff policy could be on the U.S. economy.
I think the economic policy consequences can actually be quite dire. And I base that on the size of the tariffs relative to the Smoot-Hawley tariffs of 1930, which many people quite credibly think prolonged, hastened, and deepened the Great Recession. And they set off, as we are seeing set off now, a round of competitive, they called them beggar thy neighbor policies, of tariffs going one country, another country retaliating, and so forth, building up in the way that you're looking at China right now, with the United States putting on successive tariffs, China coming back and saying, well, they're going to restrict things, and Trump coming out today and saying, well, in that case, I'm going to raise you another 50 basis points. This is very destructive. And we have trade works under the economic concept is called comparative advantage, that we really do better if each country does things that it is best suited for by geography, by natural resources, by training of people to produce and then trade, so things are made most cheaply. We've seen a tremendous expansion of trade in the 20th and 21st century because of the fall in transportation costs that we've experienced. So we have a lot more trade going on now than we had in the 1930s when the Smoot-Hawley tariffs were put on. So I think this is really going to be a very, very difficult period of transition. And most importantly, this chaos and this uncertainty that he has created means that businesses and consumers really can't plan. So for consumers, I think they're going to increase their precautionary saving. They're going to say, maybe I'm going to put that off for now. I'm not going to buy that. I might need it later. Things could be getting a lot worse. That's bad. On the investment side, companies have no idea what they should do in terms of organizing their production. Now, if the production they're organizing were, let's say, a pizza parlor, it's easy enough. Do you buy a pizza oven or do you not buy a pizza oven? We're not talking pizza parlors. We're talking semiconductor factories. We're talking steel mills. We're talking major production plants. And any company has to look at this and say, how do I possibly make a decision about what the tariffs are going to be when I'm through making that investment, whether that is a year, 2 years, or 7 years down the way. So it's going to affect the amount of investment. That's going to have a significant effect on GDP growth. And I think we've increased the risk of recession dramatically over the past 4 days.
Oh, pretty heavy stuff. Cheryl, we appreciate you joining us. Cheryl Smith, economist and a portfolio manager at Trillium, joining us from Cambridge, Massachusetts. Do appreciate you taking the time today. Well, we were hearing from Cheryl. We did get a headline crossing the Bloomberg terminal. Some breaking news. Broadcom has announced a $10 billion share buyback. We saw shares spike in the after hours, up as much as more than 4%, settled back a little bit, down to 2.7% as we speak. Well, President Donald Trump said the U.S. is holding direct talks with Iran, and the next round will take place this Saturday at, quote, at almost the highest level. Iranian officials rejected the idea of direct talks and proposed negotiations with Oman as mediators, saying they were waiting for a U.S. response to their, quote, responsible, generous, and wise offer. For more, we bring in Bloomberg News national security team leader Nick Wadhams. Nick, this was pretty wild to hear in the press conference. Yes. The U.S. and Iran do not negotiate directly. Contextualize it for us.
Well, we are trying to figure out what exactly this all means. Needless to say, that was a pretty big surprise from the president. He had said he had made an overture to Iran seeking direct talks. Iran had rebuffed that overture. Earlier today, they said they had sent actually a counterproposal to do indirect talks in Oman. And the strange thing about what the president said was, with Oman as mediator, we don't know where those would have taken place. But the strange things that Trump said was, he said there's going to be a meeting this Saturday. It's going to be direct talks, and it's going to be almost at the highest level. He wouldn't say who that was with. So a lot of confusion over here. What does seem pretty much certain is that Iran has repeatedly rejected the idea of getting in a room directly with the U.S. They haven't done that for quite some time. So trying to parse the president's comments and figure out if there's some other way they could mean potential indirect talks that don't actually involve the U.S. and Iran meeting face-to-face.
Nick, I know you said that, Bloomberg News is still trying to figure out exactly the details here, but give us an idea of what exactly would be going on in these talks.
Well, I mean, so the big issue obviously is Iran's nuclear program. Tehran has said for a long time that it does not want to build a nuclear weapon. And in fact, U.S. intelligence services have assessed that Iran is not actually looking to build a nuclear weapon. They have, however, enriched uranium pretty much to nuclear grade. And the suspicion is that if they wanted a nuclear weapon, it could be weeks, months to get one, so a very quick breakout time. I mean, the issue is that you had a deal that put limits on their nuclear program signed in 2015. President Trump abandoned that deal in his first term in 2018. Now he basically wants a second go-round. And it's very unclear what he wants. He has said repeatedly, the only thing we don't want is that Iran can't have a nuclear weapon. That's the main thing. But he had also in the past criticized the previous deal because it didn't put a lot of limits on Iran's ballistic missile programs, its funding for proxies such as Hamas and Hezbollah and the Houthis. So, you know, the big question is, would he seek those concessions as well? So limits on ballistic missiles, limits on proxy funding, and that's going to be something that's going to be very hard to do. So we are by no means even close to the middle or the end of a process. The president thinks he can do this pretty quickly, but this is going to be a very, very long slog. It took a long time for the Obama administration to negotiate that previous deal.
Nick, why would Iranian officials push back on having direct talks?
You know, it's a great question, but it all sort of gets back to the history of this thing. I mean, I think essentially they want to have some distance between themselves and the U.S. They don't want to be put in a position where they feel like their interests could be compromised or undermined or misinterpreted. They want to do, it just also shows the extreme degree of caution and just how slowly and deliberately they want to proceed on this thing. But it would also, you know, potentially have immense blowback for Iranian leadership in Tehran. I mean, this is, you know, the country where they call the U.S. the Great Satan, and a lot of the way that they proceed and pursue their national policies, their national security policies, but also their domestic policies against the hardliners is putting an enormous distance between themselves and the U.S. So you can imagine how severe the blowback might be, and then potentially how much the leadership might be undermined, especially from regular people who maybe want closer ties with the U.S. if you see an Iranian leader having a handshake with Donald Trump or, you know, some lower level. So that's just not an optic that they want to engage in.
Nick, we're going to have to leave it there. And I know you have a lot of work to do today still, so I want to let you get back to that. Nick Wadhams, he handles national security. He's our team leader for national security for Bloomberg News. He joins us from our Washington, D.C. bureau. Well, the market chaos unleashed by Donald Trump's trade war continued for a third day as stocks, bonds, and commodities all swung wildly, buffeted by both fears of a recession and speculation that the financial damage will drive him to change course. He has not changed course. One person watching this closely is John Authers. He's a columnist for Bloomberg Opinion. He joins us here in our Bloomberg Interactive Brokers studio.
Hi.
Hi. I want to get to your column, but before we do that, we got to talk about today, because the volatility that we saw today, Emily did a great job explaining what happened, but
how, what part that I...
The tweet that was...
That it moved around a lot.
That moved everything. I mean...
I thought you meant on a personal level. I went to my desk, we were in the red, I came back, we were in the green.
No, that was not it. But just to remind everybody what happened, we fell as much as 4.71% on the S&P 500 in the morning, and then shot up to 3.4% higher on the S&P 500, only to close down 0.2%.
And if you look at the NASDAQ 100, which is possibly the one where the action is greatest, the actual move, the range from bottom to top, was very irritatingly 9.98%.
You wanted to see 10.
Yes, so in the last, I will double check my Excel once I get back to my desk. There have only been 15 cases of a total range of 10% ever that I can discover. And none of those were during COVID, partly because circuit breakers were breaking in and the market just closed.
Because those weren't moves that went from losses to gains. You're talking about just in general 10% moves.
In terms of...
That's rare.
I can remember and I've been in this job far too long, but or doing this work for far too long. But the only day I can think of that really matches this is the Friday 4 weeks after Lehman went down. So Lehman goes down. 2 weeks later, Congress votes down TARP. Everybody gets scared. Friday, they finally do vote through TARP, but all confidence is gone, and it's the next week when you get a 20% fall in the S&P. It's one of these things people forget, that the Lehman shock actually took 3 weeks before it really hit. That Friday, the Dow, from memory, was down and up more than 1,000 points during the course of the day.
Which back then meant something.
Yes, and it was about 10% in round numbers, and it ended up roughly where it had started, which, when I ran the numbers that time, was, as far as I could make out, the most volatile day there had ever been. This is fairly close to that. Now, if you want some positive spin to take from that, the following Monday, when people got in, that was the first big bounce day, something like 8, 9, 10% up on the S&P. So that the absolute Wile E. Coyote falling off a cliff phase ended with that day of unbelievable volatility, splashing as Wile E. Coyote hits the water or whatever. The downside is that was still in October, and we didn't actually hit bottom until March of the following year. So although it wasn't unidirectional anymore, we did have 2 or 3 more really horrible falls. You had the rescue of Citi, you had the rescue of B of A. There were a number more scary things to happen before the fear had taken over completely. Greed was gone, and we were ready to bounce back. So that's the positive and the negative. There's no particular reason from this amount of volatility to think that things are going to calm down. There probably is a good reason to think that the precipitate fall from a great height, Wile E. Coyote style, is over.
So why are we seeing this historic volatility? Is there something underpinning, the market of 2025 versus all of the market sell-offs that we've seen in history that makes this time different? I'm thinking the growth of passive indexing, the use of algorithms now in trading. Like, is there something in the plumbing that's making this just so much more volatile than we've seen in the past?
I am cautiously, obviously these are questions all of us and many others are going to be trying to answer for the days, weeks, months ahead. My cautious answer is no. I think the growth of passive investing and of ETFs is hugely important, and that there is more top-down than bottom-up movement going on. But basically, you can trade an ETF as easily, literally as easily as you can trade a stock. That's why people like having ETFs, and you can break down ETFs. I still cannot, for the life of me, understand the point of having a single stock ETF.
So you can lever up, John.
Yes, which I don't think is a good idea.
You don't want to leverage your micro-strategy bet?
No.
I mean strategy?
No, I've got kids. I want to go through college. I want to have a happy retirement. I'm not prepared to take that risk. But and passive investing has obviously had a huge impact, and that I'm sure those changes in the market plumbing have had an effect on the distribution of these losses. So it's noticeable the Mag 7 have completely parted company today. Nvidia's had a nice bounce, and Apple is continuing to fall into the abyss. But in general, the growth of indexing means that the really big companies that by necessity are a large chunk of the indexes get it in the neck when you're going down, just as they enjoy the best of the profits when you're going up. That is true, definitely.
So the column that you wrote, or I shouldn't say that you wrote, it was published at 1 a.m. You probably finished it maybe. I'm just trying to get an idea of what you were looking at when you wrote this. Was it Friday or was it futures?
It was, okay, both. I'd written most of the charts during the day. This is one of the great things about I write on Sundays for Mondays, and one of the big advantages of that is that you actually have a fixed target to aim at.
Okay.
When you're covering markets, they're not going to move on you. So I had a lot of fun trying to get my arms around what the hell had happened.
The reason I ask is because you argue there's no sign that markets have had enough yet. Is there a sign after today's trade?
That was 24 hours ago.
Exactly. Is there a sign after today's trade that they've had enough?
Some signs thereof. The dollar has recovered a little bit again today. I'm not saying it's a huge change. What's happened in bonds is extraordinary given what's happening in stocks.
Yeah. Emily was saying that.
That is what worries me because, I mean, you had Torsten on earlier, Torsten Slok earlier, Slurk, however one pronounces. Very nice guy, very good economist, as we all know, making the point that if the dollar is strengthening and people are selling treasuries to that extent, it must be Americans selling treasuries. So I guess the big concern now, why would you sell treasuries in those kinds of numbers? There's got to be a risk that somebody's in trouble, and that's got to be the next concern. Ever since LTCM,
long-term capital management,
which unfortunately I'm old enough to remember, 1998, which nearly on its own wiped out the market. It was just a hugely levered hedge fund that got into trouble. There is every market break, there has been concern that there's going to be another LTCM. And with the possible exception of a few hedge funds getting into trouble early in the financial crisis, that hasn't happened. That dog hasn't barked. It's one of the reasons, there was this terrible scare after the Brexit referendum, and then after a few days you worked out actually nobody was so exposed to the pound that they're going to go under, that there are no margin calls happening, we can go back in the water. That's one of the most, in some ways that's one of the most similar events to what we've just had, is just a country suddenly does something really remarkable and people have to react to it. Thankfully it was just Little Britain rather than the US doing that one as well. Is it possible that there is an accident out there? I don't know, and given what I do for a living, I probably would have heard some gossip about who it was if somebody was in trouble by now, even if I wouldn't mention their name on air.
Off air, you tell us.
But yeah, and I no, nobody is. You kind of recognize the noise of these things.
Right.
I'm not getting that kind of noise.
Right.
I cannot. Somebody somewhere, for reasons that didn't really have to do with what was happening in their stock portfolio, sold an awful lot of treasuries today, and I'd like to know why, but it's unlikely that was because they just thought, well, that's a fantastic deal. I can maximize my profits and put money to work.
All right.
Else. It smells
maybe
of
a
something worse
preview
than that.
of a later column. John Author is columnist for Bloomberg Opinion, joining us here in the studio. The market down 0.2% on the S&P 500, up 0.1% on the Nasdaq.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. It turned out to be another down day for the S&P 500 index. A lot of volatility, big swings for the U.S. stock market. The S&P at one point managed to swing 7% from high to low, ending the session down 11 at 5,062 on the S&P. That was a drop today of 0.2%. The Dow down 349. Dow Jones Industrial Average down 0.9%. NASDAQ had an up day today, picking up 0.1%, while the NASDAQ 100 index was up 0.2%. The Russell 2000 index down 0.9%. The VIX now at 47. 10-year yield 4.20% with a 2-year 3.78%. Spot gold down $53 the ounce right now at $29.84. That is a drop of 1.8%. Spot gold, by the way, falling below $3,000. West Texas Intermediate crude 61.01 a barrel, down 1.7%, and Bitcoin up 0.1% right now, 78,879 on Bitcoin. Bottom line, a lot of volatility, all about tariffs. Cheryl Smith is economist and portfolio manager at Trillium, and she was a guest right here on Bloomberg Business Week Daily.
I think that this chaos that we're seeing is going to continue. For whatever reason, Trump likes to work in chaos. He appears to think that it keeps people on their back foot and that he can gain some kind of advantage from it.
Cheryl Smith, economist and portfolio manager at Trillium, interviewed right here on Bloomberg Business Week Daily. Friday, we hear from J.P. Morgan Chase. Bank stocks all advanced today. Many of them advanced, I should say. JPM up 2% today. Wells Fargo also on Friday, up by 2%. Citigroup, Bank of America next week. We got Citigroup up 1.2% today. Bank of America rallied 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, it is today's big take. It's also one of the most read stories on the Bloomberg terminal. The cross-asset team spent all weekend working on it. It's about how Wall Street is just collateral damage in Trump's trade war. Bloomberg News cross-asset reporter Isabel Lee is part of the team that worked on the story. She joins us here in the Bloomberg Interactive Brokers studio. Isabel, congratulations on this story. I know a lot of work went into it. I just want to start big picture. The investor class, it was a class that I think was served well under the first Trump administration. It was optimistic that it would see the same this administration, and it's not at all happening.
Yes, exactly. We actually missed Emily. If Emily was around, she would have been part of this story. But
She was on vacation.
Emily and I were our seatmates, and I bug her way more than I should have. But so exactly, and this is what you call the wealth effect. You know, the past 2 years, investors were all feeling flush. You would check your 401k every single day because markets were up. It's up 20% for back-to-back 2 years. And then now, please don't check your 401k because we're seeing the reverse wealth effect. And a lot of the people that we talked to over the weekend were saying that this has real implications. It will ripple throughout the economy because if you see your stocks or whatever your investments edging lower, it will really impact how you behave. You won't spend enough. Maybe you'll hold off from that appliance. You'll hold off from that vacation. And companies will also maybe lower their capex. And at the same time, there could be an argument that, you know, only 50% of Americans own stocks, but that's still half of the country. And for those average Americans, their portfolios on average are just around, their retirement especially, around 200,000+. There was a study on that. And 20% of that is still significant. It's 40,000. And that is your entire nest egg. We're not even talking about billionaires like Elon Musk. It's the normal average American. So it affects you.
What was the general vibe of the portfolio managers, hedge fund investors that you spoke to over the weekend? Were they angry? Were they confused? Were they looking for opportunities in the marketplace?
Definitely angry, definitely frustrated. And one, Jay Hatfield, CEO of Infrastructure Capital, was saying actually that he wasn't that much frustrated with Trump. It was more Scott Bessent because they were expecting more from him, given that, you know, he came from the industry. But some were also really shocked because I think this was above what a lot of people expected. This was so-called worse than what they expected. And then what do? They say you get over it and then you adjust your portfolio.
In terms of assets that the president watches, we know he used to like to talk about the Dow and the S&P 500 and equity market records. You and the team write about different assets that he's got his eye on. Bonds, especially or treasuries, I should say, and then also on commodities.
Yes, there's that. And actually, that's new because usually before it was just the Dow that he was really looking at. And there were reports over the weekend that even Fox News removed the Dow ticker, which was a first in history. I read that, but I need to fact check, so I probably shouldn't have shared it. But it's out there. But now Trump is also looking at 10-year treasuries and oil. So as stocks created, those also moved violently. They sank, basically. And he's also looking at that. But we also have him saying that the patient has lived. You know, this is short-term pain, but you can interpret that phrase in many different ways.
Isabel, you've done a lot of work over the years about the wealth effect and how it's this idea that when the stock market goes up, people see that their portfolios are doing well, so they feel good, and then they go out and spend. And you wrote in this piece, the rich who own most of the shares, most of the stocks, that 10% class that you mentioned, Tim, also account for roughly half of the country's consumer spending. And I thought that was really interesting that, like, these people that wanted Trump in office because he would support Wall Street also are a big part of consumption. And now I guess the economy is getting a double whammy.
Exactly. I mean, not to get into politics. Also, I can't vote. I always tell Emily that. But it's interesting because these people are the ones who are driving much of the consumer spending. I mean, maybe the average American, they're finding it tough. Every time I go to the grocery, I'm just shocked at my bill. But the rich people still buy. I mean, they still buy jewelry. They still buy gold. You see them still buying Lambo, which is like a joke we say in the crypto world. But they're still out there spending. But maybe after this weekend, they may not. But yes, you're right. America is largely a consumer-driven economy. And one can't really doubt whether, like, I feel like you can't ignore this anymore. They will be affected, no matter how rich you are, probably. Or, I mean, maybe I wouldn't know.
Isabel Lee, Bloomberg News cross-asset reporter. Always great when you join us. Check out her story. It's among the most read on the Bloomberg terminal. It is today's big take. Wall Street is just collateral damage in Trump's trade war. Well, let's take a look at some stocks on the move today. We've got with us Bloomberg News cross-asset reporter Emily Graffeo. She's also my co-host for the day. She's working double duty here.
I am, but
I hope you had time while you were hosting the show to find some stocks that were moving.
Yes, there was. My terminal is very helpful. I get a lot of data through the Bloomberg.
Highly recommend the Bloomberg terminal.
Highly recommend because you can really see what is moving. One of those was Dollar Tree. It was actually one of the best performers. I'm going to pull it up in the S&P 500 on the day. They got an upgrade over at Citi from buy to neutral. The analysts over there are saying that they anticipate higher across-the-board tariffs will be positive for the discount retailer, and they see prices moving from $125 to $150 or $175. That seems inevitable, but they expect consumers will be accepting of this magnitude of change. So we just heard from Isabel Lee about the richest people in America buying and maybe, pinching pennies a little bit more on their luxury purchases because now the stock market is down so much. But also in, Dollar Tree, we're potentially anticipating consumers, I guess here in this end of the spectrum, absorbing cost increases because they're so small.
Okay, Dollar Tree, certainly on your radar. Another stock.
Stellantis as well, the Jeep
the
maker. They're willing to help suppliers pay tariff costs to withstand the initial shock of the trade war. This was not good for ADRs of Stellantis, though. We saw that stock drop about 6%. This is a European automaker. So initially, I honestly saw the company moving, and I thought, maybe it'll be higher because people are trying to buy Europe. But overall, it was really just a global sell-off.
Autos, last one. We got 30 seconds for
AppLovin. This stock was up in the green today. We had a report from CNBC that they're going to merge itself with the U.S. subsidiary and eventually the global business of TikTok. And Bloomberg Intelligence said that would help the advertising tech firm accelerate its reach beyond video game clientele and into e-commerce. Of course, TikTok, really big there on e-commerce. So keeping an eye on AppLovin, Tim.
Okay, a volatile day. 3 stocks that made big moves. Emily Grafeo, thank you so much for the update. That's Bloomberg News cross-asset reporter Emily Grafeo. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Taking a look at how the broader indices closed out the day, a reminder that it was a volatile day, but the S&P 500 fell only 0.2%. That is going to do it for this edition of Bloomberg Business Week Daily. A big thank you to Emily Grafeo for filling in for Carol Massar. We now go to our colleagues in Washington for Bloomberg Balance of Power, and Joe Matthew and Kaylee Lyons bringing you an exclusive interview with Massachusetts Senator Elizabeth Warren. Let's listen.
Congress's answer to the tariffs.
Well, let's back up just a little bit. As you've been reporting all day long, every light is flashing red in terms of the economy, and that we really are on the precipice of sliding into a recession and maybe taking it worldwide. Meanwhile, the Secretary of the Treasury is going on Tucker Carlson to talk about all of the workers that Trump and Doge have illegally fired, and spin some tale about how all those people from the Veterans Administration or the NIH or the Social Security Administration can go work in these factories that will magically appear. We need a Secretary of the Treasury who's in the real world, and in the real world right now, he should be calling a meeting of FSOC. Remember, the Financial Stability Oversight Council, which is what we put in place after the crash in 2008. And this is the way that government, when the economy is doing what it's doing right now, the Secretary of the Treasury is supposed to pull everyone together and actually figure out a plan, call the plan, and then execute on the play. But that is not what our Secretary of the Treasury is doing. So that puts us in a position where Congress needs to act, and Congress can actually do it using the authority that Donald Trump himself is using. He's using something called IEPA, but the point is that if Congress says, no, there is no emergency here, then Donald Trump loses his ability to put all of these tariffs in place. So we need to act. We need a Secretary of Treasury to do his job. The Democrats in Congress are ready to act. But if the Secretary of Treasury won't act, then we need the Republicans to step up, join the Democrats, and put a halt to these tariffs that are truly wrecking the worldwide economy.
Well, Senator, the president argues it's going to help the U.S. economy, that this is actually about bringing manufacturing back to the U.S., protecting American workers, and lowering trade deficits with other countries. Is there something fundamentally wrong with that objective, or it's simply the means that you take issue with?
The objective is exactly one that I have advanced for years. Of course, tariffs should be one of our tools in the toolbox of economic policy. And there are times when appropriately executed that we could use a tariff, for example, to onshore a specific supply chain or to help build up manufacturing that we want to have here in the United States. But you do that in a thoughtful, integrated way instead of a haphazard number around tariffs applied to everyone with no thought at all about whether or not those tariffs will actually have a negative impact on manufacturing that's currently going on or any manufacturing that anybody might try to get underway. Instead of actually supporting manufacturing and good jobs, the way Donald Trump has done this has been to scare off anybody from investing here in the United States in any kind of facility that takes years to be able to build and expand and get it going. He's forcing people to pull back. That is not good for American workers. It is not good for building jobs here in America. It is not good for onshoring our manufacturing. You need a thoughtful policy, and that is the opposite of what Donald Trump has offered.
We heard from Larry Fink today, Senator. BlackRock CEO says he believes that a recession is already underway, that the CEOs he talks to say the same thing. Do you agree? And should the Federal Reserve announce an emergency rate cut tonight?
Look, I am really worried about whether we are already in a recession or just right on the edge. All of the lights are flashing red. And Larry Fink points this out, but he is not the only one. There are a lot of folks who are starting to say this, and a lot of evidence in that direction. Where our focus should be right now is on preventing it from getting any worse. And we can do that. You know, this isn't some outside shock. This is not some war in some distant land that's caused this problem. This is not that the markets are imploding because suddenly all of the bad mortgages are coming to light, like in 2008. One person has started the dumbest trade war in the history of America. Congress has the power to rein that back in. And if Donald Trump and his team won't do it, then Congress should step up and do it before more damage is done.
Well, does one person also have the power to provide a check on that damage? To get back to Joe's question, Senator, even if the Fed were to issue an emergency rate cut, would that be enough to stem all of the bleeding that you think could be happening in the U.S. economy as a result of these policies?
Look, the Fed chair himself on Friday just said that he is concerned that this haphazard tariff announcement is going to drive up inflation and drive up unemployment simultaneously. You know, I understand why the Fed chair is really worried at this moment. The one person who can stop this problem is Donald Trump. And if he will roll back these tariffs, we can at least stop the damage from continuing to bleed out through our economy and around the world. And if Trump won't do it, then we just need some Republicans in the House and the Senate to grow a backbone and do what they know is right. You know, I don't know anybody in Congress who's saying, man, this is a great idea. What a cool move. They are really worried about what's happening. They're hearing it from their own constituents at home. But they have the power to fix it. So let's put the pressure on those Republicans to join with the Democrats and take away the authority from Donald Trump to be able to continue to roll out a tariff policy that has the potential now to put millions of people out of work, cost millions of people their savings, their retirement, and start shutting down businesses throughout this country.
Looking at a letter that you sent, in fact, led senators signed by all 11 Democrats on the banking committee. It's to the chairman, Tim Scott, demanding a hearing on the impact of President Trump's trade war. I mention this because you're going to be involved in a hearing tomorrow, Senate Finance Committee, with the U.S. Trade Representative, Jamieson Greer, who I can't imagine realized the timing of this hearing when your invitation first went out. Is that the person you want to talk to? Who else would you bring before the banking committee, if not the president himself?
You bet. I am ready to talk to Mr. Greer tomorrow about what we can do right now to stop the bleeding, what we can do to try to rescue this economy before it is hopelessly caught in a recession. I want to ask that of Mr. Jamieson, and I'm going to ask him what it's going to take him to step up and tell the president to stop this tariff policy that is terrible for workers all across this country.
Well, I wonder then, Senator, how much authority you really think the U.S. Trade Representative has, or how much sway in impacting the president's decisions. I could ask the same about the Secretary of the Treasury, of the Commerce Department, of others for that matter.
Well, you know, I hope you're listening to your own question, and that is, these are the very people that Donald Trump said were the best people to do policy in each of their chosen areas. Donald Trump's the one who chose his trade rep. Donald Trump is the one who chose his Secretary of the Treasury. By golly, they ought to be doing their jobs right now. Instead of having the Secretary of the Treasury go on Tucker Carlson and spin out fantasies, he ought to be calling together the rest of the economic advisors under the powers given